to them, making money by receiving virtual currency and gifts. In the West, live streaming is mainly the domain of avid gamers. In China, it's broken into e-commerce.
China actually has a very big e-commerce empire, so it uses these super apps, what we call that you have payment, you have search of information, you have recommendation system, and you have huge amount of goods available on the platform, and as well as a lot of consumers. So with this advantage, they merge these features of live streaming to make the influencers actually sell goods.
Here is a perfect choice: nice neutrals, beautiful print, nothing overwhelming, and the warmth and comfort of flannel. This is item.
Traditional TV shopping involves a one-way direction, whereby a host introduces a product, demonstrates certain things, and say, call this number or something. But live stream shopping is live. That in itself is a very, very big difference. It causes different psychology, and live stream shopping is a very entertaining way of actually engaging someone else.
When you shop, actually, this live streaming video will continue. It will minimize into a corner, and you can buy the item.
One of China's biggest e-commerce platforms, owned by tech giant Alibaba, added a live streaming function in early 2016. In the following years, other e-commerce and social platforms like JD and Douyin also integrated this feature.
开头的时候还是有很多的挑战的，对画面的这个流畅，然后是否能够很真实的去还原商品，它其实在这个上面是有很高的这个门槛跟技术的这个卡口在的。不管是我们的这个用户的接受度，还是商家的这个上手的这个难度都很高。但是这几年下来，基本上难点在不断被突破的。
Over $70 billion worth of goods was sold via live stream on Taobao in the year through March 2021. Latest surveys show that over 60% of live stream users in China were watching shopping shows, and over 65% of them shopped at least once via live stream. In 2020, live stream shopping got a huge boost during the pandemic, when millions of people were in lockdown and many retailers were pushed online.
People, during the lockdown, felt like there's a need for more social interactions. This live platform creates an interesting kind of environment that gives people the sense that I'm actually interacting with you. And then live stream shopping brings in a lot more variety of things that people could buy and satisfy, the sense of losing control, especially during the pandemic.
At the heart of this craze are the top influencers who have tens of millions of followers and sell products worth millions of dollars every night. They often use their star power to get bargains from retailers, which in turn boosts their own sales and influence.
So if you think about China's live streaming, you have to know the king and queen of the influencers. The queen of live streaming, Via, she is actually having the biggest viewership and the biggest sales volume for a long time on Taobao platform. She can sell everything from Gucci sunglasses, lipsticks, homes, and cars. One time she offered her followers to go on a Tesla ride with her, and she even, for once, sold a rocket launch in her live streaming room for 40 million yuan. 接下来我们真的要上火箭。The king would be Li Jiaqi, more widely known as Lipstick's brother. He used to be a cosmetic sales before he turned into live streaming e-commerce. And he knows a lot about the cosmetics. So he's the one that will actually put the lipsticks on himself when he's on the show.
Top live streamers like Via and Li Jiaqi have become celebrities in China and can earn millions of dollars a year. Although not everyone can be as popular, mid-ranking live streamers like Tiffany still earn a good income through sales commissions.
如果说单从收入方面来讲的话，那主播的收入是比普通的工作要高很多。但是呢，主播这个工作时刻对身体，包括对精神都有很大的一个考验的。就是每天需要集中精力，然后长达5-6个小时，这种状态是很累的。而且这5-6个小时的话，你是脑子是不停的，然后嘴巴是不停的，然后手也是不停的，眼睛也是不停的。像我们做主播，不是说单一的只做直播一件事情，然后还会有选品的一些工作，然后还会有一些其他的事情排在里面，其实是没有个人生活的。 那我觉得增强粉丝影响力的话，不是说某一件事情啊，可能今天做了什么事情你就增大了影响力，而是每天不断的内容的输出，粉丝不断的可能对你的了解，慢慢的信任你。
里面有芝麻酱的味道，如果吃不习惯的话就慎买。
A lot of successful live streamers are generally very good at communication. They're very good at articulating very simply what a product does, what a product doesn't do. In order for them to sell, they need to be trustworthy and appear trustworthy, and they need to, show in some ways that they're authentic, right? So for Via and Li Jiaqi, they are able to articulate that quite a bit through their body language, through what they say. For example, Li Jiaqi will also sometimes say bad things about certain products because to him there's his honest opinion, and sometimes people want to hear that. And so they seem very credible, they seem very trustworthy, and don't forget, they're also very entertaining and very interesting. If you're familiar with Li Jiaqi, he won a Guinness record for like the most lipstick applications to models in like 30 seconds. So if you're able to create a lot of buzz with interesting things that you do, people who may not want to buy lipsticks will also stream in just to watch what he does. And then from there, you might get hooked.
这就是你一般女生出门的时候涂的口红的颜色。
Live streamers also use sales techniques such as limited time or supply. This sense of scarcity can often encourage viewers to buy.
The platform in itself creates and enhances some of these things because you see it live. Something we call social proof has taken over, meaning that, hey, other people are interested, other people are joining in, other people want the same product. And they add it in the chat and they ask questions and they say, oh, I want this too. What happens then? It makes the whole product even more scarce.
But it's not just influencers. Local farmers, luxury brands, even mutual funds have also started their own live stream shows.
Working with very top-tier live streamers can be risky. It's not necessary that the benefits will end up with the brand. So we see company executives opening their own shows, and we see like P&G have their own sales room which runs shows every day as well. We also have like local governors in like small towns to sell their agricultural products. So the live streaming is definitely transformed the way product owners can think about how to reach their consumers, and it enables a lot of players to actually sell.
Live stream shopping is going global. Merchants in Southeast Asia have embraced this trend. And in the West, Amazon has upgraded its live streaming function, adding interactive features like chat rooms. Companies, including Google and Facebook, are also developing and investing in technologies to integrate video and e-commerce.
直播电商它其实已经开始成为主流，它未来的发展空间跟潜力都是巨大的。
接下来大家会越来越依赖这种购物方式，会变成一个比较日常化、比较规范化的这么一个趋势。
If you look at the numbers alone, their numbers alone, Li Jiaqi's numbers or Via's numbers, you know that they can sell and you know that they can generate revenue. Are they able to sustain it over a long period of time? It depends on how innovative they are at changing some of the things that they do.
But you can't expect consumers one day turn into virtual shopping for good. There will be the nature of us that crave to go into the store, to touch the goods and actually wear it and see how it looks like and walk around in that with our friends. And those things wouldn't be replaceable with live streaming.
You could imagine that the oceans are actually the largest battery. We're storing huge amounts of energy in the oceans. The wave motion can be very deep. It can extend down several hundred meters. And once it gets to the near shore, from about 50 meters, the whole water column is moving backwards and forwards.
As we search for ways to reduce our reliance on fossil fuels, some are looking to a largely untapped potential source of renewable energy. In theory, waves off the coast of the United States alone could generate over 2 trillion kilowatt hours of electricity a year, enough to power more than half of the country.
Waves intensify and subside not as quickly as the wind, and that means that it can produce a smoother power generation curve. One of the potential advantages of wave energy is that it could act as a complementary source of power compared to other renewables on the grid if it were to be scaled up to commercial scale.
For decades, engineers have been trying to convert wave energy into electricity, but a host of technological and financial challenges have complicated their efforts.
In the years from around 2006 to 2015, there were a spate of bankruptcies in the sector, and this was largely because of a lack of kind of continuous proven projects out at sea with reliable electricity generation.
Since then, companies have been trying to develop the technologies at a steadier pace and with a smaller cash burn. But the same questions remain. Can companies develop devices and technologies that actually work? Is wave energy just a novelty or something that can become a major renewable energy source?
The sea is a very challenging environment within which to operate a power project. So seawater is corrosive and conditions are very rough. So this means that power projects don't have a very long lifetime, and it increases operating and maintenance costs.
Partly because of that, many early wave energy projects hit rough waters, such as the Palamas Wave Energy Converter in Portugal and the Isla Limpet project in Scotland. But that hasn't stopped others from trying.
Companies are focused on testing projects out at sea, proving their durability, trying to raise capital and bring down cost. The sector hasn't really converged around one single technology design, and companies are kind of undecided about which design works best.
Finland-based AW Energy is a veteran in the sector. The first proof of concept of the company's device was made in the 90s after diver Rauno Koivusaari observed the strong back-and-forth movement of a hatch cover in a shipwreck in the Baltic Sea.
The waves are generated far from the coastline, so the wind blows on the surface of the water, causing the water particles to rotate, and that rotation extends deep down below the surface, and the waves can be very long. They can be several hundred meters long. And as they come into the near shore, this rotational energy turns into an elliptical energy, and eventually backwards and forwards, as you probably noticed if you've been swimming on the seashore in large waves, you're pulled in and out. That's the energy that we're extracting. There's a sweet spot where we deploy, so around 10 to 15 meters of water depth. That's where there's still strong wave energy coming in.
After years of research, prototyping and testing, the company has deployed Wave Roller, a 350 kilowatt device in the waters of Portugal. Wave Roller has an 18-meter wide and 10-meter high steel panel fixed to the seabed via a floatable foundation. The panel moves back and forth with the waves, capturing the energy.
It's submerged in the depth of 15 meters, so it's protected from the extreme waves. We generate electricity by capturing the movement with hydraulic circuitry in a machine room underneath the surface. That hydraulic energy we turn to electricity with hydraulic accumulators and hydraulic motors, and also a generator.
The Wave Roller has survived large waves at sea for over a year and delivered electricity via an underwater cable to the grid in Portugal. Meanwhile, the company has won a €2.5 million grant to work on an upgraded version of the Wave Roller, aiming to increase the electricity generation capacity to 1 megawatt. The upscaled device would have a bigger panel, 2 power takeoff units, and improved software to control the energy production.
We have taken into use a wave prediction algorithm that kind of tells us what kind of waves are coming into our device. That gives us few seconds to prepare for capturing more energy, and the difference in that is significant.
Our future plans are to deliver technology around the world. So I'm hoping we can be working on delivering technology to projects in Asia and also in the American continent as well.
Meanwhile, Israeli company Eco Wave Power is taking a different approach to capturing the power of the ocean. For the company's founder, Inna Braverman, developing new sources of renewable energy is a personal mission.
I was born in Ukraine in 1986, and 2 weeks after I was born, the Chernobyl nuclear reactor exploded, causing the largest in history nuclear disaster. I was one of the babies that got hurt from the negative effects of such explosion. I had a respiratory arrest and a clinical death. Luckily, my mother, a nurse, approached my crib on time and gave me a mouth-to-mouth resuscitation, which saved my life. I got a second chance in life and decided to do something good with it.
Growing up, Inna wanted to be a politician to positively change the world. After working as a translator at a renewable energy company, she decided to change paths.
Solar and wind energy were fully commercialized. There were a lot of amazing technologies implemented everywhere. I saw that wave energy, although it's an immense source of electricity, the biggest companies in the world are trying to develop wave energy with no success. And there was kind of a race going on in the world of who is the company that is going to develop a viable wave energy solution first.
In 2011, the then 24-year-old Inna co-founded Eco Wave Power. Instead of installing devices offshore, the company's devices are attached to existing breakwaters, jetties, and piers.
Our technology is very cost efficient, especially in comparison to the offshore technologies, because we don't need any ships, divers, underwater mooring or cables. We install on existing man-made structures, and all our expensive equipment, the generator, the hydraulic conversion unit, the automation, is located on land just like a regular power station.
This is the EcoWave Power conversion unit that has been operating in Jaffa Port since 2014 until 2020. Here you can see how the technology works. Basically, the floaters are going up and down and pushing the hydro cylinders, which transmit biodegradable fluid into land-located accumulators. A pressure is being built. The higher the waves, the higher the pressure, which is used to turn the hydro motor, which is turning the generators. The whole system is controlled by a smart automation system, which you can see right here. And in case of upcoming storms, the system automatically raises the floater above the water level and keeps them in the upward position until the storm passes.
The company has been operating a 100-kilowatt grid-connected device in Gibraltar since 2016, which is enough to power 100 households. Currently, Inna and her team are working on another 100-kilowatt project at the port of Jaffa in Tel Aviv.
The project will be also the first time in the history of Israel that wave energy will officially connect to the electrical grid. And our goal going forward is to expand it to all suitable breakwaters in the city of Tel Aviv and to supply a significant part of the city's electricity needs.
Today, engineers and entrepreneurs are still trying to crack wave energy. Globally, only a few hundred kilowatts of wave energy are deployed, compared with gigawatts of offshore wind. But the field has come a long way in recent years, and with the right engineering solutions, this new power source could eventually become competitive with more mature renewables like solar and wind.
I would have a lot more confidence in the success of wave energy companies today as opposed to like 20 years ago. But in the next few years, or maybe the next couple of decades, it will be more likely to be used in remote locations like islands that are otherwise dependent on expensive diesel power, or out at sea on gas decommissioning rigs, or for powering underwater autonomous vehicles.
So definitely, wave energy can compete with other renewable energy sources, but I personally believe that this is not a competition. In order to have a 100% renewable energy friendly world, we need all renewable energy sources to work together.
Who are all these people from? Who are all these people from?
So can you please tell me? I'm not going to... please wait.
You know, I've covered a lot of companies. I've covered a lot of Machiavellian companies where, you know, people play rough. I don't think I've ever seen anything on the scale of Nissan.
He is making you, but you act from this side. I mean, it's corrupt. The system is...
One of the most dramatic elements was Ravinder Pasi's home being raided by court officials in Yokohama.
You scared my wife. You scared my children. I worked in this for 16 years.
So Rav Pasi's journey into the darkest recesses of the Japanese corporate world started when he was the general counsel, the highest corporate lawyer position in the company.
In the past few minutes, Nissan has revealed that its chairman has been arrested after allegations of serious misconduct.
He was tasked with investigating Carlos Ghosn. And he was told, conduct an internal investigation and get to the heart of the matter. And then along the way, he started to notice serious conflicts of interest.
He is one of the few people who knows an extreme amount of detail regarding the alleged crimes by Carlos Ghosn. And he's now ready to tell his own story on the record about some of the events that happened.
My name is Ravinder Pasi. I'm the former Global General Counsel of Nissan Motor Co. Limited. And you could say, yes, I had a front row seat in terms of what was going on.
When Carlos Ghosn saved Nissan years ago, he was depicted in Japanese comic books as this hero, and now maybe we'll see comic books where he's the villain.
In corporate Japan, Nissan was quite an unusual company. It was led for 2 decades by a non-Japanese executive.
Well, Carlos Ghosn was a hero in the Japanese business world. If you had a global business celebrity in Japan and worldwide, it was definitely Carlos Ghosn.
In a country with few foreigners at the top, he stood out. But over the years, he saved Nissan from bankruptcy, allied side with Renault and Mitsubishi and turn the alliance into one of the most competitive in the world.
Yet as the years went on, I think his ambitions changed a little bit. He started thinking about legacy plays, and one of them was to really tighten the alliance between Renault and Japan. And unbeknownst to him, there was a contingent of senior Nissan executives that were really felt threatened by that move. They really thought that they would lose complete control of the car company, and even in the government, there was probably a little bit of anxiety about a national champion in the auto industry falling under full-blown foreign control.
Carlos Ghosn was an auto industry leader, respected by many in Japan. Now he's in jail.
The arrest of Carlos Ghosn came completely out of the blue. This was in November of 2018. He was coming to Japan on Nissan's corporate jet for a regular executive meeting, and he was met on the tarmac by Japanese authorities who whisked him away to jail and charged him with financial misconduct crimes.
So what happened was that a power struggle ensued inside the company, and somewhere along the way it was criminalized. By that I mean that there were allegations leveled at Carlos Ghosn about the way he reported his pay to Japanese authorities, the way he handled money inside the company, that in other contexts might have been a board action, might have been handled internally. A number of executives at Nissan decided to take this difference and take it over to the Tokyo prosecutor's office, and that unleashed a chain of events that would shake the entire auto industry.
So after Carlos Ghosn was arrested, Nissan launched an internal investigation into the events that led up to his arrest.
So Rav Pasi was tasked with investigating Carlos Ghosn, and he was told, get to the heart of the matter, find out what Carlos Ghosn did wrong and bring it to our shareholders.
It's really complicated because you had various things coming out of the weeds. 2018, the investigation has started, and we become aware of matters in terms of conflicts, actions by certain individuals that cause some concern because things might not quite be what they seem.
So in our story, we really took a close look at Harinada and his role in Carlos Ghosn's downfall.
Harinada is one of the most fascinating figures inside Nissan. He's also a lawyer. He's originally Malaysian. Hello, Mr. Hari. And he had a meteoric rise through the company and became very, very close to Carlos Ghosn and other top figures. He had a front row seat at all the major strategic deliberations at the company. And when he discovered that Carlos Ghosn, as his final legacy play, was going to tighten the relationship between Renault and Nissan, he made a decision to go against Carlos Ghosn. And he became one of the key figures that decided that Carlos Ghosn had to go.
Harinada was somebody who actually recruited me into the company, so I have a long-standing relationship with him, or did have a long-standing relationship with him. For many, many years, he was a mentor. I had doubts about the credibility of the process right at the start. Harinada had a plea deal with the Tokyo prosecutors. Now, that suggests he was intrinsically involved in some of the wrongdoing, or the allegations of wrongdoing, and it just didn't smell right, just doesn't sit right.
So there was a basic conflict of interest. In other words, Harinada had to deliver results to Japanese prosecutors to avoid his own criminal liability, and he's accusing and leading the investigation of Carlos Ghosn.
Some of the people who had been involved in the original alleged crimes were also looking into the affairs themselves. Ravinder Pasi began pointing out some of these conflict of interest issues. And the reason for that is essentially his concern was for the company. If the company's own investigation into itself was compromised, that could lead to a very weak position in various lawsuits that it was dealing with across the world.
I had discussions with Harry, discussions with the statutory auditors about these conflicts, discussions with HR about some of these conflicts, because at that point, we reported into him. You know, at the time, everything was quite, as you can imagine, it was, we've got to do this, we've got to do that, we've got to move fast. But when you step back and look at some of these things, you just think, my God, what was going on here? Because members of my team were being placed in immediate danger. Your chairman's been arrested, a representative director's been arrested. They both happen to be foreigners. And then now what we need to do, we're being instructed to do, is certain compliance professionals need to go into properties in Brazil, for example, and retrieve evidence. They've got to do it very carefully, because if they don't do it carefully, they're going to get convicted of criminal activities. And likewise, when a team of lawyers were commissioned to go to Lebanon, I mean, one of my immediate concerns was, why are lawyers from Nissan being sent to go to Lebanon to retrieve evidence? These are just lawyers, they're corporate lawyers from Nissan. You had revelations that a number of executives had benefited from share appreciation rights when they shouldn't have. I mean, you know, substantive amounts of money being taken by these guys when they weren't entitled to take them. And you do think, yes, how is this going to look later on? It's going to look quite concerning. So that triggered, for me, the sort of assessment that, well, I'm going to have to do something, because up until this point, I haven't put down on paper these conflicts and these issues.
So Rav Pasi makes a fateful move. He writes this letter to the board listing every suspicion he has in great detail, backed up by evidence, backed up by memos, of why this internal investigation had serious problems. He sends the letter to the board, and it's crickets. He doesn't hear much of anything.
Nothing happened thereafter. Nothing at all. Just like it just gone into a black box.
And he began to suspect that there was a desire, even at the highest level within Nissan, to kind of sweep these conflicts of interest under the rug.
Unfortunately for me, I think, you know, again, with hindsight, people must have thought that this is the nail that's sticking out, and we can't have this. Within 3 days of me submitting that to the board of directors, that letter to the independent board of directors, I was removed from the Goan Executive Conduct Matters. I was then told that I could not attend board meetings anymore. And up until that point, I had attended every single board meeting. I was then also told that after 8 years of being in Japan, I'd be going back to the UK. It eventually transpired that I'd be the VP of Projects and Transformation, managing a team of 3. So you can imagine what this feels like at this stage. Almost an arbitrary removal from Japan, where I've lived for 8 years, had 3 children there, my family has grown up, and we've been settled there, having a few months earlier, been promoted to vice president at a global level to being almost demoted.
So Pasi was essentially being reassigned to get him as far away from the internal investigation as possible, and also to a certain extent in retaliation to some of the issues that he brought up regarding the internal investigation and Harinada.
What happened to Rav Pasi can be seen as a series of corporate humiliations. I mean, first of all, his immediate responsibilities were taken away from him. Eventually, he lost, the coveted general counsel title. But it didn't stop there. Toward the end of his stay in Japan, Rav and his wife were convinced that they were being followed.
During that period, I'd noticed that whilst driving my car, I'd have other cars following me. First time I noticed this was around mid-March, and I was driving, I can't remember where I was going, but this grey van, small van, just literally started following me. And I noticed that there was somebody in the car taking pictures. And lo and behold, we were absolutely being followed either by people on foot or other individuals, 2 or 3, normally 2 burly men in a car, different cars at different times, following us around. They were following the family as well. And, given I'd seen the Nissan security department behave in a very, very egregious manner with others in terms of following and surveilling, I was very concerned as to what they were doing and who they were giving this information to. Because if they're giving this information to the authorities, you do think, why? What's going on here? I mean, this is just not normal behavior.
And this all culminated in a rather dramatic event in the middle of 2020.
Who are you people?
Where Nissan had hired a legal team and had obtained an unusual court order from the district court in Yokohama
to basically do a search of his home and seizure of his corporate laptop and phone and other documents.
If you don't let us in now, we have to break this key.
So it's a pretty extreme way to treat someone who'd spent 16 years at the company.
These people have all come in. We don't really know who they are, apart from the fact that I've been shown a badge that says the Yokohama Court. And they're here to recover a laptop and a mobile phone. It was even more weird because I'd highlighted to the directors that certain Nissan executives were trying to recover this laptop and this phone whilst I was still in Japan. And I was very concerned because it had evidence on there that related to misconduct matters and other forms of inappropriate conduct. It was just another form of intimidation, another form of harassment, forcing me almost to leave the company and the country. Because once they'd retained and obtained these items, we were still followed, which, again, I just couldn't understand. What is the point of doing that? This isn't a car company. This is not the KGB.
I think it's fair to say that Rav Pasi didn't have full battlefield awareness of all the intrigue going on at Nissan. I mean, Harinada is interesting because he's both charismatic and charming, and one of the most brutal corporate infighters one could ever run across.
This is a confidential company email, right? You should not have this.
If he had fallen into line, he would probably still have his job at Nissan, be paid very well, and continued his work.
A career that he spent 16 years building at Nissan is irretrievably broken. It's been smashed to smithereens. He and his family paid a huge price, certainly, But in terms of being able to sleep at night, I think, he's come out ahead.
I highlighted issues to the highest levels of the company so that they could be dealt with appropriately by those in charge. There was no response to those, and there was retaliation against me. What's really profound, like absolutely profound, is that none of your colleagues, I mean people who you have known for years, forget it.
Yeah.
You're on your own.
Yeah.
And you got to be ready for that. You've got to be ready for that. If you take it on anyway.
This is the awful truth. There's always someone in the family that's pushing it.
This lady does not deserve to be taken advantage of, especially at your age with your own grandchild.
Yeah.
My grandma is having to sue them. I'm testifying against them. Nobody's talking. They're one floor below right now. I get afraid to go on the elevator. It's sad that it had to devolve to this.
It's like a soap opera
It's a
to
very
me.
sad thing.
It's a family feud.
A family feud.
Here's a family that, on paper, you would think has the wealth that so many people seek, yet at the end of the day, it seemed to sort of rip everybody apart. My name's Tom Schoenberg. I'm a senior reporter here at Bloomberg News, cover financial enforcement. I was approached by someone close to the Schottenstein family and asked whether or not I would be interested in writing about Beverly Schottenstein and this case that she had against J.P. Morgan. And it was immediately clear that there was a great story here to be told. So I started just, assembling all sorts of documents that the family made available to me. That included a diary that Beverly had begun writing when she started having suspicions about what was actually going on with her money. Beverly obtained her wealth from the Schottenstein kind of retail empire that has at times included Big Lots, Value City, American Eagle Outfitters, DSW Shoes. Beverly's husband died, and at which point they sold off their portion of the company, bringing them an enormous amount of wealth in around 1990. Estimates of her wealth were around $90 million. She, for many years, had that pool of money being managed by outside advisors. Her grandsons in the late 2000s had both graduated and were becoming financial advisors. She gave them a little bit to work with, and over time, her grandson, Evan, became the trustee of her entire estate. Managing sort of family money is not a conflict. In fact, some ways in wealth management, it's kind of how you get your start. It's kind of the seed that you need to sort of get going in the business. But Beverly started having suspicions that something was wrong probably in around 2016.
Well, there were suspicious things, but taken separately without everyone talking about their own experiences, it was hard to really put it together.
She had written a check to her caretaker, Dawn, that bounced. So she went down to her local Chase branch to sort of find out what was going on. She wasn't getting paper statements in the mail, so she asked them to print out a number of her statements having to do with her checking account and her credit card account.
So we went to the bank and asked for the statements. And she got a whole year and going through all of them, page by page by page.
And it was there she saw all sorts of charges that she said she didn't authorize or didn't know about.
I was becoming very, very suspicious. I was starting to look in the money part, and that's what bothered me more when I saw that money was going, and I was not a big spender.
Around the same time, Dawn, she starts noticing Beverly's son, who lived in the condominium below her, came up with Evan with a shredder and started grabbing papers in her office area, including some with JP Morgan letterhead, and just started sitting at the kitchen table just shredding documents over and over.
Yeah, they came in one morning.
They used to do it in the back.
Through the back door, and they brought the shredder inside. And then they went in the drawers in the office and took out all the papers, and they started doing it. I was very suspicious because I know you don't go around and destroying papers.
Beverly said that they had done this many times before.
That's when she said to me, you know, Dawn, I'm going to write my feelings in this black book.
Diary.
And it's a diary, and she started writing. Each day she would write a little at a time.
Around the holidays of 2018, a package had arrived, a FedEx package, and in it were materials about a venture capital fund based out of the Cayman Islands. Dawn and some other family members take a look at this, and they see that Beverly is signed up for this fund to the tune of $5 million over the course of several years.
And that was really the beginning of it. That was sort of the tip of the iceberg when it became obvious that something was going on, that my grandmother really wasn't aware of this fund.
You know, Beverly started to panic. She got really upset and called, JP Morgan's headquarters in New York and asked for Jamie Dimon. She said she was told someone would call her back, but she says that never happened. She wrote a letter to Evan and Avi, and in there she laid out a number of things that were concerning her: unauthorized trading, the checking account. She had about $1 million worth of jewelry in a safe deposit box, and that her son Bobby had the key to that box, and that jewelry had gone missing. All this was kind of packaged in this, 5-page handwritten amendment to a will and trust.
There's such an evolving narrative about why the jewelry was taken. The only truth we really know is that the jewelry is gone. But why it happened, there have been a lot of different stories.
You just don't take your mother's wonderful things and hand it out.
And they emailed that note to JP Morgan to seize all activity on her account.
And it ended up setting off a firestorm after that. As soon as they got this email that there was a cease and desist and that she wanted to send her money and change brokerage firms, they were actually vacationing one floor below downstairs. They're there right now.
The next day, Beverly's in her place, the granddaughter's still in her place visiting. Dawn is there, and up comes Bobby kind of barging through the door. And he's screaming about what was sent to the JP Morgan. They're now investigating them. And he's furious, takes his mother and sort of puts her into a chair, gets pen and paper, and she says physically forced her to write a retraction letter.
They were pushing me around.
It was a scary time. I was really afraid too.
I had to take her to the doctor, and she did an x-ray because she was in so much pain.
The locks had to be changed. The phone number had to be changed. I really thought we were going to have to hire guards to be outside just for protection.
Oh, it was terrible.
Horrible scene.
Beverly brought her case before the Financial Industry Regulatory Authorities, usually known as FINRA. It took several months of hearings. She sees all sorts of transactions that's going on, hundreds of them that she claims that she never knew about, never authorized, but yet were logged in JP Morgan's files as having been direct requests from her. That included the sale of a large amount of Apple stock worth several $1 million, as well as all her stock in Big Lots. You know, over the course of their time with JP Morgan, Evan and Avi were making all sorts of trading on her account that was generating millions of dollars in commissions for themselves and the bank, yet she was not sort of getting any of the type of gains that you would expect sort of an $80 million account in a bullish market to be able to get. They issued a ruling entirely in her favor, finding that her grandsons, as well as JP Morgan, they were liable for violating their fiduciary duty, misrepresenting themselves, and they also found that the bank and her grandson, Evan, were liable for elder abuse. Evan and Avi, they were fired from JP Morgan. They issued an award of about $19 million. I reached out for comment, and JP Morgan emphasized that Evan and Avi were no longer with the firm and that their actions do not represent the sort of values of the bank. I reached out to Evan and Avi, heard back from their lawyer saying that, you know, they disagree with the law and the facts that FINRA kind of used to decide the case against them and are seeing if they can have it withdrawn. Her son, Bobby, wrote her a letter, said his sons weren't criminals, and he also admits to taking her jewelry. And he says he needed it to pay off some bad business debts he had.
They never once came up to say, I'm sorry.
If there had been an apology and some acceptance, and asking for forgiveness from my grandmother, I don't think we'd be in the position that we are now.
Since the piece came out, we've received dozens of messages from people, many of whom are telling their own sort of personal tales of, kind of financial advisors gone bad, or family members who got control of an estate and abused, those within. Seems that it's really resonated with a lot of people. I keep, hearing a lot of feedback about Beverly and how, a lot of people feel she did the right thing.
You're never too old to stand up for yourself and try to right an injustice. She was adamant that she wanted to stand up for herself, but at the end of the day, they did wrong.
It's a painful life lesson. Beverly taught them that you don't mess with grandma.
On April 20th, oil markets did something they never had before, and they crashed, went into negative territory, and closed the day at minus $40. Meanwhile, in a place called Thaden Boyce in Essex, a group of 9 traders, led by a guy called Cuddles, made $660 million over the course of a couple of hours.
The price of oil has collapsed to a record low.
We've never really seen anything like it. WTI this morning down more than 35%.
People maybe wouldn't have been so surprised if the oil price had fallen to zero, but the oil price went to minus 38. It went far lower than anyone had expected. And so lots of people in the market were saying, well, hang on, something else is going on here.
A couple of months later, I started to get wind through a kind of network of sources that a tiny firm in the outskirts of London had made a huge amount of money that day and potentially had some part to play in what happened.
The information we got was that 9 traders at Vega Capital London had made in the region of $660 million in one day. As a group, I think they made as much money in one day as Apple makes from its international sales in one day. I mean, it's an insane sum of money.
Did they pull off a fantastic trade? Did they predict the way the market was moving and get it absolutely right? Or was there something else going on, and had they actually done something that breached market rules in a bid to sort of push the market? And that investigation is ongoing. So Paul Commins is a trader who cut his teeth in the pits in the 80s and 90s when everyone had a nickname. His was Cuddles. If you can imagine, that was a very sort of cutthroat type of world where people are doing, you know, hundreds of thousands and millions of dollars trades by shouting at each other, giving hand signals, and then sort of scrawling on scraps of paper.
The culture of the trading pits in London was very influenced by the working class guys who became traders there. They weren't like the city bankers that had gone before them. They weren't usually Oxford or Cambridge. You know, they didn't wear Savile Row suits. They were ordinary working guys who happened to have a talent for trading. And a lot of them came from Essex.
I think it was 400 traders in the pits, and Cuddles in his, you know, oil and gas pit was described to us as amongst the top 3. In amongst that, was very successful and made, you know, very large amounts of money as a young man. But, you know, inevitably, mechanization and the arrival of electronic markets was the kind of death knell for the pits. And in 2005, the IPE closed down.
And when the pits shut down, a lot of the traders who worked there lost their jobs or quit or went to work for financial institutions. But Paul Commins decided to start his own trading collective out in Essex.
Some of them are ex-pit guys, cut from the same cloth as him. Lots of them are actually sort of in their 20s, and they're his, you know, drinking buddy's son, or they're his own kids' friends from football. You know, they're young lads, hungry and ambitious, and he brings them into the fold. And fairly shortly, he's got, you know, maybe a dozen or so traders that they're independent, let's be clear, but they're all part of this collective.
Yeah, I'll let Liam deal with Essex.
I am from Essex, so I feel like I'm free to, you know, to get into this.
Sweet, as they say.
If you were to ask someone in Britain how they would imagine a kind of Essex person, they would see someone who's maybe slightly flamboyant, with a sort of Cockney accent, a sort of Guy Ritchie-style accent. You know, not afraid to splash the cash, but it's probably pretty bright and has done well for themselves.
Don't even make sense, does it?
But, you know, these guys, they drove around very nice Rolls Royces and Bentleys. They went to places like Marbella on holiday.
Thaden Boyce is a very wealthy place. You have to have considerable income to be able to afford to live in that village. It's a really nice place to live, and it's 20 minutes tube ride away from the city.
Earlier in the summer, we have this lead, which is that there's this tiny firm called Vega Capital London, and they were the biggest winners from the biggest oil crash in history. You know, anyone that covers markets is going to be surprised about that. You know, you're thinking your BPs of the world or your Glencores, but it's this tiny firm.
And one of the big challenges that we had was actually finding out who worked with Vega Capital. It wasn't immediately obvious, and at first we had absolutely no idea. If you go to the Vega Capital website, it says it's under construction. If you do basic online searching, it's very difficult to find anyone who's publicly connected to the company.
So inevitably, we're incredibly curious at this point. Like, who the hell are these people?
The more reporting we did, the more it became clear that this group were connected socially as well as professionally. They went to weddings together, they played golf together, they would go on holiday together. We found out that a number of them were members of the West Ham Supporters Club in London. A few of them started companies together, so you could see all the connections between them and start to see a distinct group emerging.
And it really just was this kind of shock that, you know, this wasn't just like a hedge fund or a firm you'd never heard of. This was actually a group of buddies who all had the same experience on this day and had all made a huge amount of money. So if you're an oil trader, there's a number of different ways you can trade, and probably the most popular is WTI futures contracts.
And it's basically a contract that says, I'm going to buy 1,000 barrels of oil from you at this point in the future, or I'm going to sell 1,000 barrels of oil to you at this point in the future.
It's actually just a financial contract to gamble on to predict whether oil is going to go up or down.
On the 20th of April in Essex, there had been signals for a while that this was going to be an exceptional day in oil markets. And we know that some of them arose early and started their trading in the early hours of the morning while it was still dark outside.
Essentially what they were doing is buying contracts that gave them an obligation to buy oil at whatever the price ended up at 2:30 p.m. So they're basically placing a bet that oil was going to fall throughout the day.
But they're simultaneously selling lots of oil as well. And whether they make a profit and how much profit they make is the difference between what they buy the oil for and what they sell the oil for. Now, of course, we now know throughout April 20th, the price dropped and dropped.
So this is going very well for them. You know, they are committed to selling oil at these prices, and the prices are continuing to fall, which means they're going to be able to offset it and buy oil at cheaper at the end of the day. Now, once it gets to kind of 1:30, 2 p.m., that's when things start to get really interesting. Suddenly there's a kind of influx of buyers and sellers, you know, as desperation increases in the market and trading volumes go up. Now at 2:08 p.m. exactly, something bizarre and unprecedented happened, which is that oil passes into negative territory.
And it fell to a record level of minus $38.
We've never seen anything like it, period, in terms of the contraction of the global economy.
That huge gulf between what they were buying the oil for and what they were selling it for enabled them to make more money than they ever thought possible.
So their profit was the difference between minus 37 and all of these positive numbers on every contract they sold.
The price of crude briefly hit minus $37 a barrel. For one group of traders operating from a small office, it was a very, very profitable day.
It's important to remember this had never happened before in the history of oil trading. No one could have predicted it.
I can't think of another example of where you enter a trade and you get paid on both sides. You get paid both to sell and to buy. It's unthinkable.
One thing we know about the Cuddles Trading Arcade is that they were very comfortable taking large risks. And, you have to be clear, this was a large risk.
Yeah, we spoke to oil traders, both people that know these guys and people that don't, and they all say that this is, incredibly risky.
And that's actually what stops a lot of oil traders doing trading like this. They simply aren't willing to stomach the risk. But Cuddles and his friends were.
So when the kind of final calculations came down, the group of the 9 most profitable traders made $660 million or thereabouts between them. I mean, if you can imagine, I think 3 or 4 of them made in excess of 100 million each.
One of the astonishing things about this trade is that 2 of the individuals who made more than $100 million in a single day were in their 20s. One of them was 22 years old. Only a few years earlier, he'd been posting on his social media about doing teenage stuff with his mates in town and going to see girls and rap music. And here he is a few years later making $100 million in a single day's trading. When me and Liam discovered that, we couldn't believe it. We couldn't believe what we were seeing. Oil trading is a zero-sum game. Anytime you're making money as an oil trader, someone else is losing it.
Amongst the biggest losers were the investors in this Chinese fund, Crude Oil Treasure Fund. There were thousands of them, and they lost everything.
Lots of people had put their savings into oil funds. They lost money that day. Big banks and brokers who sort of stand in the middle of trading parties, they lost money that day.
And another interesting thing is that oil-producing countries like Kuwait or Canada, they sell oil as an average of the WTI closing price over the preceding month. So the fact that one of those numbers in that average was minus 37 meant, if you can imagine, countries like Saudi Arabia and Kuwait potentially lost a couple of dollars on every single barrel of oil they sold that month.
Vega Capital's traders made such an extraordinary sum of money that it was inevitable there would be some scrutiny of what they did. But it wasn't just the sums of money they made. In the vital half an hour before the settlement price was set, they were by far the biggest sellers of oil futures in the market, which is an incredible thing to think about when you consider that the other participants in that oil market are going to be the world's biggest banks, oil majors, BP and Shell, and here you have a group of 9 guys in Essex who are having this significant influence over a global market for oil.
I mean, I think you have to assume that if these guys had made $7 million or $10 million, they probably would be celebrating in Essex right now. But the fact that they made closer to $700 million has meant that they are facing understandable scrutiny.
We wrote individually to all the Vega traders who did exceptionally well that day, and we got a letter in response from a law firm representing the group. And the law firm was at pains to point out, number one, that they haven't been accused of any wrongdoing, that they all traded independently and separately, and they'd basically all made up their own minds that this was what was going to happen in oil markets based on publicly available knowledge, and decided to execute this trade.
What I love about these stories is there's a real variance of opinion, and some people will look at what happened and think that must be dodgy. They all traded at the end of the day. They all made a huge amount of money while all these people lost. That's shocking. But lots of people say these guys are at acute disadvantage. They're in a market that's inhabited by, huge technology-driven funds and firms and oil giants that have got all the advantages in the world, and when you get a bunch of Essex geezers who essentially beat the market and find a way to make a huge amount of money, they should get a pat on the back, really, because that's the dream. Since this happened, a lot of the guys have stopped trading the monthly settlements that they've done so well at in the past. Several of them have set up new companies. They've essentially gone very quiet. Any kind of social media presence they had is kind of closed down. By all accounts, they're, waiting this out.
It's certainly too early to try and predict how the regulatory investigations are going to pan out. We just don't know. There's a number of potential outcomes for these guys. Potential punishments if there are any findings of manipulation against Vega or anyone affiliated with it might be you could be fined, you could be banned from trading, and in the most extreme cases there have even been criminal prosecutions in the past of people who have been found to have been manipulating the settlement and misconduct related to trade at settlement. There are other outcomes too. One obvious one is going to be that they're able to walk away from this life-changing trade with all the money that they made and celebrated as heroes in the trading community. That they'll go down as legends.
It's very important, given the nature of the climate crisis right now, for the general public to have an understanding of what progress is or is not actually happening. And I think many readers right now, they'll see these hundreds and hundreds of companies making these big, bold climate claims. And they would be forgiven to think that we're well on our way to meeting the emission reduction trajectory we need to be on. And the reality of the matter is we're just not on that trajectory. And a key reason for this sort of disconnect is the use of offsets that aren't doing what they claim to be doing.
We have a massive potential for sort of willful blindness. We can convince ourselves of things regardless of what the facts are. And so that's what tends to happen in these cases. It's not that anybody is setting out to commit climate fraud. They sort of walk themselves into a situation and they convince themselves of one thing, and that allows them to convince themselves of another thing. But at the end of the day, they're doing something that makes no sense at all.
My name is Ben Elgin. I wrote the story about how the billion-dollar market for carbon offsets is setting back the fight against climate change. So one of the challenges in reporting on carbon offsets and trying to figure out what's going on is really finding good experts who have been steeped in this marketplace and are willing to candidly talk about it. One of the best people for this is a fellow named Mark Trexler, and I've been talking to him for more than a decade.
My name is Mark Trexler. I've worked in climate change for the last 30 years. I was actually hired by the World Resources Institute in Washington to work on the first carbon offset project in 1988. In terms of defining a carbon offset, one of the beauties, so to speak, of greenhouse gases, sort of the silver lining of greenhouse gases, when you put up a molecule of CO2 into the atmosphere, it can be anywhere in the planet in 7 days. And therefore, if there's an option to reduce emissions on the other side of the planet, and you can do that very cheaply as compared to doing it in your factory, for example, then why not pay that person, that factory on the other side of the planet to reduce their emissions? Then you are, in a sense, offsetting your emissions, and the atmosphere doesn't really see your emissions anymore.
So carbon offsets have been around for quite some time, and they were actually key with these international climate agreements, such as the Kyoto Protocol, which mandated the wealthiest countries reduce their greenhouse gas emissions.
The treaty was signed on the 11th of December, 1997.
Decided. The business community in general saw carbon offsets as a huge opportunity to comply with whatever policies and measures might be coming down the pike on climate change much more cost effectively.
We've seen a huge surge in companies making big proclamations about how they're going carbon neutral or zeroing out all of their carbon emissions.
We're going to reduce our carbon footprint to net zero.
Unilever is committing to net zero emissions.
We can achieve a net zero emissions world.
We began looking at these corporate claims of dramatically reduced emissions, and we noticed so many of these companies were using carbon offsets to achieve these aims. And as we began to look at the carbon offset projects themselves, what we found is that the environmental benefits claimed by these companies are not actually what they seem to be. And as we sort of saw and spotted a number of these very aggressive carbon offset projects, which appeared to be generating inflated credits or bogus credits, we saw a number of them were associated with the Nature Conservancy. This surprised us. The Nature Conservancy is the world's biggest environmental group. They have about $1 billion a year in revenues, and they've been around for 7 decades. They've preserved about 125 million acres of land, and they've done so many good works over the years, and they've been very strong in terms of working with corporate partners. The Nature Conservancy has taken a different approach, a very pragmatic and pro-business approach. They will not go out and criticize a big polluter, but they're very happy to work with them. Some might say that, well, that's selling out, but others would say, and those at the Nature Conservancy would say, these companies have deep pockets. They can help fund important preservation work, and we have absolutely no problem working with them on this stuff. So companies are very warm, and they've partnered with the Nature Conservancy for many years. And yeah, it definitely lends a sheen of credibility to these projects.
Here's 20 new reasons to visit Disney World this year. 1, 2, 3, 4.
If you look at, for instance, Disney, that's a sprawling company with theme parks and cruise lines that burn up diesel fuel. They have office buildings and television studios that consume electricity. So these companies are trying to make major reductions in their carbon footprints, but it's very difficult to change these fundamental ways their businesses operate. So Disney has been a big buyer of carbon offsets that are orchestrated by the Nature Conservancy. One of the projects that they buy from is called Pennsylvania Ridges. And that's a plot of land. Most of the land is actually about a 3-hour drive outside of Philadelphia. Interestingly, this land, 3,000 of these acres, was actually acquired by the Nature Conservancy in the late 1990s. This land was imminently threatened. There was a pending logging contract on this land. So they do what they've done so well for all of these years, which is they go out, they raise money from local philanthropists, and they go buy this land to protect it from developers and loggers. And at the time, according to an archived version of the Nature Conservancy's website, when they were proudly announcing this deal, they said, these threats have been abated because of this acquisition by the Nature Conservancy. So it's really interesting now, fast forward 2 decades to earlier this year when they put forward this carbon project. And if you look through it, this land is a key part of that carbon project. And what they're now saying is this land is now, once again, imminently threatened. 72% of the trees are going to be cut within 5 years. Now, this is just astounding because this land is owned by the Nature Conservancy. They do not clear-cut land that they've bought through philanthropic donations. So this scenario that they've put forward to get carbon revenues is not really plausible. And what that means is when you have Disney coming in and buying these credits, when it eventually lowers its carbon footprint because of these credits, well, that won't be a credible or truthful claim by Disney. So this is an organization that truly understands the threat of the issue of climate change and is wanting to do its part to address this. However, in this situation, it just appears their drive, which they've had for decades, to increase the amount of revenues that it can use for land preservation work. Nature Conservancy and many others see that carbon credits as a pot of money that they can tap into to further their own benevolent aims. But unfortunately, what this has resulted in is claims of climate progress that just aren't really happening. So the Nature Conservancy defends vigorously these deals, and they and others will say, look, our projects are just following the rules that these registries set up. So some would also put some of the blame on the registries themselves because they're setting up the rules which allow these vapid projects to get up and sold. So we've reached out to all of the companies we mentioned in this story, including Disney. They didn't want to be interviewed for this story, but they all told us that, look, we have to rely on the experts out there, and those experts, they say, are these carbon registries that have been set up. Most of these Nature Conservancy deals are set up and sold on this exchange. It's called the American Carbon Registry. Now, it's the oldest of these registries that allow voluntary carbon credits to be sold. They've been around since 1996. What these offset registries do is they set up rules, and any carbon offset project has to follow those rules. But there's this tension that's always there. If the rules are too strict, then it's going to be very hard for carbon offset projects to get up and running. So there's this balance going on where the registries want rules that attract projects, but they don't want it to be so strict where it will disincentivize projects from getting listed.
One of the challenges with designing carbon offset systems is that there are normally two people at the table. You have buyers and you have sellers. And to some extent, you have policymakers, but you know, the buyers and the sellers are really the ones with the expertise, with the incentive to really participate hard, make a lot of things happen. And the challenge there is that both of them sort of want the same thing, or they're both happy with the same thing. They're happy with low-cost offsets and a lot of them, because that works for their business model. You end up, though, with nobody really representing the atmosphere, so to speak. Nobody's really representing the climate in those discussions. And so the policies end up biasing the whole system, and you end up in sort of a race to the bottom, and that's what we've seen happen. You know, when it comes specifically to the topic of carbon offsets, I And I'm a fan of carbon offsets in the sense that they can help mitigate climate change. They absolutely can. But, if we're not going to do it correctly in a way that actually does help mitigate climate change, then it's nothing but a distraction. And, after 30 years, you have to start wondering, is it really just a distraction? And that's really unfortunate, but that's where we are. Ultimately, what needs to happen is systemic change. We're sort of nibbling around the edges with some of these different things. We need to change how we produce energy. We need to change how we transport ourselves. We need to change what and how we eat. We need systemic change associated with transitioning to a low carbon economy. A lot of what we're doing today is not promoting systemic change. It's sort of trying to stick your thumb in the dike to preserve the current system. And at the end of the day, that can't really work.
The Hyperloop. There's a good chance you've heard the name by now.
This is the Hyperloop system. It can take people hundreds of miles in minutes.
The Hyperloop, a series of tubes that would transport people in pods at ultra-high speeds over long distances.
This is a remarkable new form of transportation that can whisk people from city to city in a flash.
29 minutes from New York to D.C., 30 minutes from L.A. to San Francisco.
For years, we've been seeing these futuristic, utopian renderings of some cross between a spaceship and a monorail. But lately, the Hyperloop is becoming much more real.
Yes! It was surreal to be even sitting inside a Hyperloop, and just even more incredible to actually be like riding down a track in something that was nothing more than a crazy idea 6 years before.
Companies all around the world have been developing and testing the technology needed to propel passengers at speeds of over 1,000 kilometers per hour. But for many, speed is only the first step to unlocking the full transformational effects of a new mode of transportation.
Fast is what we just sort of take for granted in the Hyperloop world. It's the network effects that really deliver the benefit. And that opens up a completely different scale of economic opportunity.
We've got planes, trains, automobiles, and boats for getting around Earth. But what if there was a fifth mode? And I have a name for it, which is called the Hyperloop.
The Hyperloop?
Hyperloop, yeah.
In 2013, while riding high on the growing success of Tesla and SpaceX, entrepreneur Elon Musk released a white paper outlining the basic framework of the technology he called Hyperloop. The basic idea goes a little something like this. A tube reduces the air pressure to a near vacuum-like environment. A Hyperloop pod is then suspended in the tube, usually by magnetic levitation. The whole pod can then be propelled forward. Because there's no traditional friction sources like air resistance or rolling friction that would push back against the pod, the Hyperloop is able to move at incredibly high speeds and do so fairly efficiently. Despite its futuristic name, however, the general concept behind Hyperloop is actually pretty old. In fact, New York City's first attempt at an underground public transit system in the 1870s was based on a similar principle. The pneumatic transit system was short-lived, however, only stretching one block and topping out at a rather leisurely 10 miles per hour. While Elon would make some 21st century improvements to this concept and bestow a very 21st century name, he wouldn't end up pursuing the technology itself, instead electing to focus his efforts on something a little bit deeper, literally digging the requisite tunnels via his boring company. It would take another billionaire industrialist who dabbles in spaceflight. No, wait, not that one. Yeah, that's the one. After Richard Branson would make a large investment in the company Hyperloop One, it would be renamed to Virgin Hyperloop.
What we've always been trying to do as a company is show that this technology could work, that it could be made safe, and that ultimately it's something that's happening in the next couple of years, not the next 20 years.
Josh Geigel is the co-founder and CEO of Virgin Hyperloop. In a familiar tech startup story, he's seen the project go from a garage to a large-scale testing facility outside of Las Vegas.
So we started building the first kind of Hyperloop system in 2016. We've done a lot of work, about 500 tests that we've done on that over the last 5 years. And what we realized that we need to do is take that technology, show that it can be commercial, so drive the cost down, improve the efficiency, improve the performance. But the key thing is actually making it approachable and safe for individuals.
In order to do that, Josh, along with Virgin's head of passenger experience, Sarah Lucian, bravely volunteered to take the inaugural ride.
What her and I were realizing is we're the first two people sitting in a Hyperloop. The only type of people that have gone through this environment are in spacesuits, and there we are in just normal clothes because of the system, the safety of what we've designed.
3, 2, 1, launch.
And then once we started going, you felt a bit of acceleration. We accelerated a little bit harder than we would in commercial. It'd be like a sports car. Yes. We got to about 108 miles an hour on that test. And it's a short run. It's about 500 yards or so, and came to a stop.
The test, lasting only about 20 seconds and covering only a quarter of a mile at just over 100 miles per hour, is a long way away from a true functioning Hyperloop. But as for optics, it's a crucial step for the future of funding.
The number one question we got from investors or from project proponents or just people in general was is a Hyperloop safe? And what better way to show something is safe than by actually getting people on it?
But convincing investors and governments that would likely be fronting some of the construction costs for an unproven technology is no easy task. First and foremost is the question of safety.
Most people don't know how an airplane works, but yet they get on an airplane. They get on an airplane because, it's faster than driving, and most importantly, they've probably gotten off of one before, they've seen someone get off of one before. And so what we set out to do was actually show that Hyperloop could be safe with two normal people, not astronauts, not adrenaline junkies or test pilots or anything like that. Two normal people getting on a Hyperloop, and then most importantly, those two people getting off.
But beyond safety concerns, constructing Hyperloops will undoubtedly require a significant capital investment to the estimated tune of around $60 million per kilometer of track. So a track from San Francisco to Los Angeles, for example, is likely to come with a price tag over $10 billion. And before large governments are willing to come in and front those costs, investors who are funding Hyperloop development must accept it as a long-term mixture of technology and infrastructure investing.
Investors that are used to short returns because you're developing apps or something to that effect, those aren't the investors that really get excited about Hyperloop. What you start to see is the people that are looking at platform technologies, right? So this idea that because the smartphone existed, Uber could exist, right? So who are the Vanderbilts of this century? And that's the part where you're going to get a lot more no's than yeses. But those people that have the ability, the fortitude to stick it out, to see the game-changing platform here, those are the people that we're looking for. And since we've done that passenger test, there has been a lot of interest that's really, this is a lot sooner than I thought.
Envisioning the ripple effects of what Hyperloop could achieve, though, is fairly challenging at this stage of development. It's fast, yes, but for point-to-point travel, traditional maglev trains can move pretty fast as well. And outside of China, South Korea, and Japan, even those haven't seen much adoption elsewhere due to the high costs and questionable profitability. The Shanghai line in China, for example, loses around $100 million every year. Hyperloop companies, however, believe they can offer something different than traditional railway lines.
My name's Alan James, and as far as I know, I'm the only guy on the planet who's written a government-level business case for 300 kmh conventional high-speed rail, 500 kmh maglev, and 1,000 kmh Hyperloop. It's fundamentally about moving people from where they are to where they want to go, when they want to make those journeys, and doing it in much smaller numbers. So pod designs for Hyperloop range from 12 to 28 seats, typically. Why are they small? It's because small enables the network to operate flexibly. And a great example of that is the east-west strategic route across the north of England, from Liverpool to Manchester to Leeds. So to get from Liverpool via Manchester to Leeds by train is just short of 2 hours today. It'll probably take you 2 hours driving as well in average traffic conditions. Net result is those three city regions remain three separate entities: Liverpool, Manchester, Leeds. There's very little commuting traffic between those urban areas. Hyperloop absolutely changes that from the ground up. Liverpool to Manchester is a 5 or 6 minute journey. Manchester to Leeds is also a 5 or 6 minute journey. What that effectively does is create a single super city economy.
In this vision, the Hyperloop acts a little more like a highway, where pods have fixed destinations and don't need to stop along the way. Meaning you can travel on a Hyperloop network from, say, Liverpool to Leeds, while the pod behind you travels from Liverpool to Manchester. And if that metro Hyperloop network is connected to other networks from the same location, you could travel from Liverpool to Paris or Liverpool to Amsterdam, all without making a single stop.
For passengers, for business, for leisure, that is utterly transformational. For high-value freight and logistics, it's equally transformational. But critically, if you do a Hyperloop network at scale, you begin to deliver massively significant carbon savings too.
A multi-regional Hyperloop network could become a replacement for both short-haul passenger and cargo flights and traditional ground transportation, both of which are significant carbon producers.
One Hyperloop-connected distribution hub, perhaps at an airport that is predominantly used for international air freight, replacing maybe 10, 12, 15 distributed road hubs. It takes a lot of polluting and inefficient truck haulage off the roads. That itself means roads gain extra capacity.
Hyperloops will still need to use electricity to both move pods and maintain the near-vacuum environment in the tube. Proponents of the technology believe that this can be done by using renewable sources, including a combination of solar panels and battery technology that could be used along the Hyperloop itself. But even with all multipliers of time and carbon emission savings that a Hyperloop network may provide, the investment capital required to actually build such a network becomes even more economically and politically daunting.
Committing doesn't mean spending billions on day one. Committing means, how do we phase it?
One company in the Netherlands is working to develop that technology, and perhaps more importantly, the international coalition needed to make the Hyperloop network a reality.
So we are here in Europe's first full-scale Hyperloop test facility, where we can already prove every conceptual technology of the Hyperloop.
This is Tim Houter, a co-founder and CEO of Hart Hyperloop, headquartered in the city of Delft. And while this testing tube might not seem as large as others, inside is a key technology to create the on and off-ramp type infrastructure of a Hyperloop network. That is, a lane switch.
That's something we can already test here. You can actually see it here, that the track is diverging from one track into two. That makes it possible to eventually split up the Hyperloop track in two sections. And in that sense, you can create a complete Hyperloop network that in the end will make it possible to travel, for example, over a whole continent. And take Europe, for example, with the same ease as you can now travel with a metro in a city.
The nice thing about this magnetic levitation system that we've developed is that there's absolutely zero moving components in the track. So for example, if you have to do a lane switch, all you do is that the tube basically splits up, and statically the tracks also split up. And whenever the vehicle enters a switch, it either pulls itself to the right with its magnets, or it pulls itself to the left with its magnets.
Lane switching on traditional rail requires the physical movement of the rail. Even modern magnetic levitation tracks use lane switching techniques in order to transfer trains from one track to another.
And this is a very crucial element because this is the thing that limits the capacity and, in the end, the usefulness of the rail network. Because the moment that a track is switching, that means that at that moment you are creating an unsafe environment for the trains behind it. So you need a lot of space between trains. But in a Hyperloop, because you have no moving components in the track, all the vehicles can be much closer to each other. You can achieve a very high frequency and basically have your vehicles moving and merging in and out of the network very much like a highway.
For now, though, HART's physical testing has been limited by the size of their tube. Because the test track is only 30 meters long, they haven't tested this lane switch at speeds greater than 20 kilometers per hour. However, the company is working to build a new test site where it plans to increase that testing speed to 300 kilometers per hour.
We're now in a phase where we have proven most of the most important technologies in the test facilities that we already have. And we have also demonstrated the viability and the feasibility of a network. If you look at all the subsystems that it consists of, most of those are proven systems, already demonstrated in lab conditions. So we don't really believe that the technology itself is going to be the biggest challenge.
Because for all Hyperloop companies out there, actually building a Hyperloop system requires more than just a good product.
We're talking about the safety aspects, we're talking about integration into the environment, we're talking about the social aspects. Do people feel comfortable traveling in such a system? So it's about all these different aspects. And the complexity is really getting all the different stakeholders that are relevant and that do need to contribute to bring this to market, to get them all following the same roadmap.
In order to help build this coalition of private and public interest in Hyperloop development, HART in 2018 partnered with other Hyperloop companies from Europe and Canada. The goal was to define, establish, and standardize the framework to regulate Hyperloop systems.
Right now we are working with all the Hyperloop developers together in setting up the first, let's say, structure for starting the standards drafting.
One of the most important goals for HART is interoperability, which is essentially making sure the different systems can communicate with each other.
Interoperability is so important because what we want to achieve is actually have this seamless travel experience. So you don't want to end up, for example, going from Madrid to Paris and then switching because you need to use a different technology to get, for example, to Amsterdam.
The idea being that as companies around Europe create the first commercial Hyperloop tracks between individual cities, one day those can all be connected to a larger network.
Everyone that believes that Hyperloop is a future transport system also realizes that there is a need to have this network because that's where Hyperloop thrives.
Hyperloop is such a huge project. It's definitely not something that you can do on your own or as a single company. So you need to do it with a lot of other companies. You need to have the governments. And I think in that sense, the biggest challenge that we've encountered is to really get all the required parties together to take the steps in development and in commercial implementation.
HART's next plan is to build the European Hyperloop Center, an open testing facility which will include a 2.6-kilometer test track. And the company hopes to test travel speeds there at up to 700 kilometers per hour. Virgin Hyperloop is also racing to construct the first commercial Hyperloop route, with projects in various states of development in India, Saudi Arabia, and the United States. Recently, the company announced plans to build a Hyperloop certification center in West Virginia, which will include a 6-mile-long test track. Proving the technology here will be crucial if Hyperloop networks can find a home among infrastructure investments that the Biden administration hopes to make.
The idea that there's multiple Hyperloop companies, I think, is a redeeming aspect in the business. People really want to see something happen, so having multiple people move forward is good for that.
I was struck when Josh and Sarah rode the pod. 2 or 3 of the major outlets used the phrase, "We now have a new mode of transport." And although all of that technology had existed before those 2 human beings rode it, it was the moment at which those 2 human beings traveled that short distance down the tube that in popular imagination, Hyperloop became a mode of transport.
The metaphor I use with my team is that, the Wright brothers were first, but none of us fly on Wright Brothers Airlines anymore. If you don't continue to innovate, you're not going to be around, and so we'll continue to be at the forefront of building Hyperloop.
Back in 2013, Elon had an idea. I think the difference now in 2021 is some brilliant engineers have spent real time grinding out the details. And I thoroughly expect the next 3 to 5 years to be decisive.
This week, how hydrogen can transform our energy usage. We'll look at why the universe's most abundant element could be a game changer in the climate revolution.
Hydrogen technologies are not new. They are used in other sectors. We use them in space on our rockets. And we don't need the laws of physics to change to be able to use hydrogen on our planes.
From iron ore to green hydrogen, one of Australia's richest men tells us about his pivot to sustainable energy.
Let's take action. It's practical, it's implementable. Let's do it now.
Plus, the hydrogen revolution. We'll speak with the CEO of Italian utilities firm Snam about his new book and how green hydrogen could be competitive within 5 years.
Costs are coming down and people are waking up to the fact that it's the only way to decarbonize certain sectors.
From Bloomberg's global headquarters in New York, I'm Kaylee Lines, and this is Bloomberg Green. It's a new year, so here at Bloomberg Green, we're highlighting new solutions in the fight against climate change. And one of those is as old as the universe itself, hydrogen. It's the simplest element around, but could well be a game changer when it comes to turning around our dependence on fossil fuels. Today, hydrogen is used in the chemicals industry to produce petroleum products. It's also starting to be used in steel production, an industry under a lot of pressure to decarbonize. But it has far more uses as well, from powering cars to heating our homes. And Bloomberg New Energy Finance sees a seismic shift in the sector in the next 10 years as green hydrogen squeezes out dirtier alternatives. So-called gray hydrogen dominates today. But as renewable electricity gets cheaper and more accessible, so will green hydrogen. In this week's edition of Bloomberg Green, we'll explore what this push into hydrogen means for tackling climate change. We'll hear from Australian billionaire Twiggy Forrest about his pivot from iron ore to hydrogen, and we'll also speak with the CEO of Italian utility company Snam about his book, The Hydrogen Revolution. But first, what are we using hydrogen for? And why does it actually matter? Christine Lee Edwards explains.
Hydrogen, the most plentiful element in the universe. On Earth, we find it mostly bonded to oxygen in the form of water, or in other gases known as hydrocarbons. Hydrogen gas, H2, burns hot and clean, making it an attractive tool in the race to net zero. But isolating hydrogen from other elements is no easy task. Today, the cheapest way to do this is via chemical processes that break up natural gas. This releases a lot of carbon dioxide. Another method is to use electricity to split water molecules in a process called electrolysis. Although there is no carbon byproduct, a lot of electricity is needed. And if this power comes from burning coal or gas, it negates the zero emissions goals of using hydrogen to begin with. Hydrogen produced in this way, powered by fossil fuels, is called gray hydrogen. If carbon capture and storage is used together with fossil fuels, then it becomes blue hydrogen. If nuclear power is used, it's called pink. And finally, green hydrogen is when it's produced via electrolysis and powered from renewable sources. This method is considered emissions-free. It's predicted that by the early 2030s, H2 made from renewables will be cheaper than that made from fossil fuels. But that hinges on the cost of electrolysis declining, which will be achieved through larger projects and an expansion of manufacturing. To be clear, vast amounts of H2 are already used today. Global production in 2018 totaled 117 million metric tons. This hydrogen is mostly used for its chemical properties, not as a source of energy, and very little of it is clean. Some sectors like steel could start using hydrogen for these chemical properties, replacing coal. Industries like cement and glass may also use hydrogen as a source of heat. Another advantage is its energy storage potential. It can be stored over long periods of time and used when more power needs to be added to the grid. It also could hold an advantage over batteries in heavy transport and shipping. The promise of hydrogen for energy has been around since at least 1874, when Jules Verne wrote about it in his book, The Mysterious Island. But the future of hydrogen will depend on policy. Countries with net zero targets, carbon pricing, and hydrogen strategies with investment mechanisms are likely to see the highest H2 demand.
That was Bloomberg's Christine Lee Edwards explaining what hydrogen means for the energy transition. But how are businesses approaching the sector? Well, one of Australia's richest men is making a big play into hydrogen. Andrew Forrest, better known as Twiggy, made his fortune from iron ore, being the chairman, former CEO, and major shareholder in Fortescue Metals, one of the world's biggest miners. But after having made over $10 billion in profit from the metal in the last fiscal year, Twiggy wants to transform Fortescue into a clean energy company. He's been scouring the planet in search of investment opportunities in hydrogen and renewables. The firm plans to allocate up to 10% of its annual profits for green energy investments and is exploring projects across the globe, from Indonesia to Argentina. Francine Lacqua caught up with Twiggy Forrest.
There's only one type of clean hydrogen, all the rest is dirty.
Yeah.
That is green. If you just say green hydrogen is clean, the rest is dirty, then you've actually nailed it. And, you know, anyone else who produces any other rubbish, any other argument, just look them there and say, why is global warming accelerating if anything you're saying is true? And then you'll know, actually, it's greenwashing.
Yeah, but there's a lot of greenwashing because I keep on being told it's a transition. We can't just, make the transition at a click of a finger. So what are we doing wrong? What can we do better?
I don't remember the personal computer having to transition the typewriter. I really don't remember that. I don't remember the smartphone having to transition the pocket calculator and the old landline. You know, its transition line is complete rubbish. The lie got put to it 2 days ago when JCB, a really loved British company, every right for the country to be proud of JCB, and Fortescue, holding a bit of a similar reputation, fantastic track record, everyone's done super well from Fortescue, huge balance sheet, super strong. When those two companies got together and agreed a $79 billion US agreement per annum, right, then that's a real wake-up call to say, hang on, green hydrogen is obviously commercial now. You know, every other form of fossil fuel hydrogen, you know, it can compete with it on price, it can probably lose on price, but what we know, it is cooking the planet. And only green hydrogen, zero methane, zero carbon in the supply chain. Don't worry about the molecules in the supply chain.
But at the moment, we're not even phasing out coal, if you look at the G20 communique. So we have a long way to go to talk about only using green hydrogen.
Yeah, so look, I have a call, which I'd like to make now, that the world should not fund any more coal-fired power stations, coal mining projects, ever. We should wind them down as quickly as possible because they are cooking the planet just like grey and blue hydrogen is cooking the planet.
Yeah.
You know, hydrogen, which is not made from renewable electricity, is releasing 10 to 16 times more carbon, let alone the methane, which is worse, than it is hydrogen. So we've just got to stop doing things which are self-harming under the guise of greenwashing.
So why are leaders so slow? Even if you look at the appetite for ESG investments, they're growing exponentially, so are emissions. So where are we allocating capital?
Okay, so take the recent G20. There's probably a reason why there wasn't strong action coming out of the G20 because people were not aware that major transactions between large companies were taking place now on green hydrogen, that actually this pollution-free all the way through the supply chain fuel was now being transacted at multi-billion-dollar scale. If they'd known that, I don't believe any sovereign leader or any energy minister or climate change minister could not take ultra seriously that green hydrogen is now here to stay. It's broken through. History has been made. It will never go back.
Okay, what is the one thing that you would tell leaders today and business leaders? How do we transition faster than what we are now because we're at real risk of missing our targets?
Oh, so that's really simple. You stop funding, you stop subsidizing, you stop using money into fossil fuels. It could be carbon sequestration, it could be fuel rebates, could be anything. Hundreds of billions of dollars getting ashed while we ash the planet on fossil fuel subsidies. Because we haven't had that renewable electricity, we haven't had that green hydrogen, we've kind of been pushed down. It's all sorts of excuses. Oh, it'll never be commercial. It'll never be supplied in the quantities we need it. You know, blah, blah, blah. Now we know, let's take action. It's practical. It's implementable. Let's do it now.
Okay, if we do it now, is there going to be a shock to the energy system? Is there going to be a shock actually to economically? And is it worth, not talking about transition, just going from A to B?
Yeah, it's a fantastic question. A to B is the solution. Let fossil fuels do what fossil fuels do. Just burn their coal, burn their oil, burn the gas. At least they're pumping up carbon and methane into the atmosphere, honestly. Well, not that honest because they don't measure methane, which is 90 times worse than carbon. But at least the carbon is being done honestly. Encourage the green hydrogen sector to come in really fast. Okay, it's there. There's renewable power all over the world. We now know how to make electrolyzers much cheaper, like 25% of the original cost. We know how to do that now. We don't have an excuse to get into it.
Does it need to be cheaper than oil and fossil fuel for it to be viable worldwide?
Well, right now it is. Okay, so let's just swallow that bit of financial data. Right now it is cheaper, and it's getting more cheap. It's the only fuel you know of which is declining in value.
You don't have enough of it, right, to power the world?
Yes. That's only because we haven't had policies to support it. If we had policies to support it 5-10 years ago, it would be everywhere. You'd see the global warming budget start to come down.
Yeah.
Now, we've got 5 or 10 years to make a huge difference. I need policy leaders all over the world to appreciate now, okay, big business is transacting with green hydrogen in multi-billion-dollar agreements. We now know it's here and it's here to stay. Let's spread it everywhere.
Coming up on the program, the hydrogen revolution. We'll speak with the CEO of Italian utility firm Snam about his new book and why he thinks green hydrogen will be competitive in just 5 years. Plus, how are airlines working to become more sustainable? We'll look at how Airbus plans to step up in the climate fight. This is Bloomberg Green. From Bloomberg's world headquarters in New York, I'm Kaylee Lines, and this is Bloomberg Green. What will the world look like in 2050? Will global temperatures have stabilized, electric vehicles be abundant, and solar and wind power homes around the world? According to Marco Alvera, the CEO of Italian energy company Snam, that vision of the future could be a reality. And he says that hydrogen will pave its way. As he tells it in his new book, The Hydrogen Revolution, Alvera's moment of reckoning came in November 2018 when he tasked the Snam Scenarios team with studying how Europe could reduce its CO2 emissions to zero by 2050. Looking through the results of the study, Alvera said he was struck by how much hydrogen was in Europe's energy mix by that year. Beyond the abundance of hydrogen, the Snam model also predicted that it would be the cheapest form of decarbonized energy for many sectors, and that it could be cheaper than today's prices for oil, coal, and nuclear power. Our Maria Tadeo spoke with Alvera at COP26.
It's happening all very fast. We see the cost of hydrogen coming down a lot. Hydrogen will play a big role in the energy mix. I don't know if it's going to be 15 or 25% of a fully decarbonized energy system, but it's going to be big. Costs are coming down, and people are waking up to the fact that it's the only way to decarbonize certain sectors, so-called hard-to-abate sectors.
And you say it's the only way and the costs are coming down. Where do you see prices moving? Because a lot of the reticence at times has to do with the pricing, that some argue, well, it's still not the cheapest option on the market.
So when I was first working in hydrogen in 2004, it was costing $1,000 per megawatt hour. 2010, 600. Today, 100, and we see it going down to 50 in 5 years' time, and to going down to $25 per megawatt hour in the next 10 years or so, which is a quarter of where it is today. That's really because renewable energy, and we're talking green hydrogen here, renewable energy costs are falling, but the cost of making the electrolyzer, which is the kit that you use to convert solar or wind energy and water into hydrogen, the cost of this kit is falling a lot because it doesn't really exist on an industrial scale. So as we build up capacity, we industrialize it, we standardize it, and we squeeze costs out. That's really the cost trajectory.
And for that, of course, you need demand, however, for governments and also institutions to kind of buy into this idea that it is the future and we want to invest and create infrastructure. What are they telling you? When you speak to governments, when you speak to officials, are they keen on this?
They're very keen. So the Department of Energy shares our view in the States of getting to below $1 a kilo, which is $25 a megawatt hour. The European Union has a hydrogen strategy, which is very clear, and several member states have the same. Chile wants to export a lot of hydrogen. China's big on hydrogen. Australia is very big on hydrogen. Japan is blending already hydrogen. So I would say the world is now really focused on this because it's the only way to store energy for a long period of time economically is to convert it into either a liquid or a gas.
And of course, you talk about the price, but the other big component is the volume. You know, how big can you go? Where do you see that on a time scale?
So wherever it's sunny or windy, you can produce very cheap hydrogen eventually. And so compared to oil and gas, which are concentrated in few parts of the world, it's going to be very democratic from that point of view. So every sunny place, every desert, every ocean wind can be turned into hydrogen that we can put on ships, in pipes, and really start trading it around the world. So it's going to happen a lot faster than a lot of people think.
So, and when you say a lot faster, what is that in time?
As I said, $50, which is essentially oil parity within 5 years. And then, depending on how quickly we ramp it up after that, we could get to $25, which is coal parity before the end of the decade.
And in big scale.
In big scale, because once you get to coal parity, that's the only way we're going to get China and India to stop burning new coal. We have businesses in China and in India, and I see a lot of hydrogen development, a lot of renewable development in both countries. The India announcement was incredibly strong on 2030. Some people were upset about the 2017 net zero deadline, but when it comes to 30, he announced a big commitment to get to 50% renewables.
Were you surprised by it?
I was surprised that they would make it so explicit, and even the net zero is a big thing for them. And so I think it will happen faster than 2070 because of the falling cost of renewable and hydrogen. India's burning 80 gigawatt of oil, of diesel, to keep the lights on. So there's an immediate opportunity there, and we're very interested in working that country.
And with regards to China, perhaps the fact that we haven't really seen them active, I guess the diplomats are working on this, but we haven't really seen the leadership.
It's going to be technology, it's going to be industry. I think China has committed to a net zero, which is very important. At the G20, China was clearly behind the 1.5 degrees. So I think a lot has been achieved between the G20 and COP, and I think what's really important is to see in the coming years how quick. It's in our hands to make part of this happen in 5 years, or it could otherwise happen in 15, 20 years. It's about building the project. The capital is there. We saw how many trillions of dollars are already committed. What's missing is really the projects, and that's where companies like us step in.
Marco Alvera, CEO of SNAM there, speaking with our Maria Tadeo. Let's turn now to the aviation industry. It's a big contributor to global greenhouse gas emissions, and it's under pressure to change that. In October, the International Air Transport Association, a trade body representing airlines, approved a target of achieving net zero emissions by 2050. To achieve that, many airlines in the US and Europe are looking to buy sustainable aviation fuel made from renewable sources like used vegetable oil. Initiatives like these are pushing plane makers to come up with some radical new aircraft that will eventually cater to our growing appetite for travel without hurting the environment. We took a look at how Airbus, the world's #2 aircraft manufacturer, is stepping up to the challenge.
How long until we can fly emission-free? Airbus says it's more confident by the day it can be done by its 2035 target. Airbus's CEO spoke about its ambitions for hydrogen-powered planes at the company's summit in France.
The physics works. Hydrogen technologies are not new. They are used in other sectors. We use them in space on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes. So every day we become more confident, but we think we need to have a plane, we need to have the right fuels, the hydrogen available in the right quantity at the right place at the right time, and we need the regulations to be ready. So we really need the work and the collaboration of many people around the globe to make it happen on time.
But it could be a long wait until green passenger jets go mainstream. Larger aircraft with more than 150 seats are not expected to feature globally until about 2050. That means manufacturers and airlines today are under growing pressure to ramp up short-term innovations to cut their carbon. In the long term, meeting the ambitious plans for so-called green hydrogen means building a giant industry almost from scratch. To make that happen, British airline EasyJet is among those saying governments need to get involved and fast. Aviation's emissions over the last 3 decades leading up to the pandemic grew by about 80% to over 1 gigaton, and that's projected to double by 2050. According to Bloomberg NEF, about half of the airlines with the largest global market share have set net zero targets by that same date, nearly 3 decades away.
Coming up, from blue sky projects to the bottom line, we'll speak with our Bloomberg NEF expert Meredith Annex and dig into their models about how hydrogen fits into the future energy mix. This is Bloomberg Green. From Bloomberg's World Headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. Now let's bring in Meredith Annex, our Bloomberg NEF hydrogen specialist, to talk more about how hydrogen could change the energy landscape. So Meredith, what place do you think hydrogen is likely to have in the future energy mix globally?
Hydrogen's this incredible solution for us as we look to decarbonize because it's a perfect solution in areas that are hard to electrify. So where we like to think about hydrogen playing a role, it's in things like heavy industry, especially where you need a feedstock as well as energy source, and in things like dispatchable power, long-haul transport, maybe even shipping and aviation.
That sounds great that it can be used for such diverse industries. At the end of the day, though, how much is this going to cost?
Well, that's the amazing thing about hydrogen, because depending on how you make it, it can actually see significant cost declines in the future. So when we're talking about clean hydrogen, we usually mean green hydrogen produced from renewable electricity. And in that case, your hydrogen is almost as cheap as the renewables that are used to make it. So if you're in a place with really good renewable resources, you'll be able to have cheaper hydrogen. But even in places with less good resources, we think that hydrogen can be cheaper than $1 per kilogram, which is the price of unabated hydrogen today, and around $8 per million BTUs for those who prefer to think in energy units. And that can be achieved anywhere in the world by 2050, we believe.
All right, so let's talk about kind of the pros and cons list. I don't know where cost fits into that, but what are the advantages to hydrogen over other renewables, and then what are the drawbacks?
Yeah, main advantage is the fact that hydrogen can serve roles that electrons struggle with. And that's things like seasonal storage, for instance, or just anything where you need storability, where electrons are harder to store, hydrogen is going to be easier. That also leads to a downside, though, because hydrogen is less energy dense than the usual things that we use for storable energy today, like coal or oil or natural gas. So you will need more volume of storage to handle the same amount of energy.
Let's talk about the viability as well and how it may differ in different geographies. What is your view on that?
Yeah, so for green hydrogen, again, from renewable electricity, really places with the best renewable resources, things like Latin America or the Middle East, even Southern Europe, have really, really good potential for producing hydrogen. And then when you're looking at blue hydrogen, which is produced from natural gas or coal with carbon capture and storage, we do see that becoming more expensive than green hydrogen in the future, especially as renewable electricity costs come down. But that can be a viable option in places like the US Gulf Coast or Russia, where you've got good geological storage for the carbon, as well as ample natural gas that's quite cheap.
All right, great breakdown. Thank you so much to our Meredith Annex, our Bloomberg NEF hydrogen specialist. And of course, you can get more from the Bloomberg NEF team on the terminal and online. And they've recently done a podcast called Hydrogen 101 as part of its Switched On series. So from iron ore titans pivoting to cleaner energy to talk of a hydrogen revolution, that's it from this week's edition of Bloomberg Green. We'll be back next week with a deep dive into the state of electric vehicles. And you can keep the conversation going by following us on YouTube, Instagram, and Twitter @Climate. I'm Kaylee Lyons from Bloomberg's World Headquarters in New York, and this is Bloomberg Green.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Best level of the day right now for the Dow, the S&P, and NASDAQ. On the week, we're looking at a more than 4% gain. Wall Street, though, seeing another day of stunning reversals. Stocks are rallying off after a sell-off in Treasury sputtered. The yen is jumping as Japan intervenes again to prop up the currency. S&P right now up 71, a gain of 1.9%. Best level of the day there. We've got the Dow up 626, up by 2.1%. NASDAQ up 187, up by 1.8%. On the week, we've got the S&P on track for a gain now of more than 4%. The 10-year 4.22%, the 2-year yield 4.49%. Spot gold is trading higher by 1.5%, $16.51 the ounce, while West Texas Intermediate crude oil is up 0.5%, $84.96 a barrel on WTI. After earnings, Snap shares are plunging now by 29.9%. Sarah Hunt is portfolio manager at Alpine Woods Capital Investors. She told us earnings estimates must come down.
I would say that we're holding higher than normal cash levels. So if normal is somewhere between 0 and 5, maybe you're closer to 5 to 10 or in some cases over that. I think that this is a very difficult time in the equity markets. As we've seen, the volatility has just been much wider than expected. And we have had the markets come down in multiple compression before we really get an earnings reset. And I think that's the biggest issue going forward, besides what the Fed is doing. It's the earnings reset. And we haven't really seen that yet. And I think it's coming.
Sources tell Bloomberg Biden administration officials are discussing whether the U.S. should subject some of Elon Musk's ventures to national security reviews. Today, we are looking at Twitter shares down by 4.7%. Apple will be among the big names scheduled to report next week. A very busy week for tech earnings. Apple shares up now by 2.1%. Stocks higher. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
TGIF, everybody. It is Friday, October 21st, live from the Bloomberg Interactive Brokers studio, streaming on YouTube. I'm Carol Masser. Tim Stenovic off today, and joining me, host of Bloomberg Surveillance and Bloomberg Markets, none other than Paul Sweeney. How are you?
Great to be here. I'm seeing the market here kind of having a nice afternoon. It started out pretty well, but we're just kind of hitting some new highs on the S&P, so I like to see that closing out the week.
I gotta say, I'm crediting the new album drop from Taylor Swift, leading to Spotify outages for the lack of a fundamental change in the outlook, because I can't explain up-down anymore.
No, it just seems like volatility is the name of the game. But the VIX, it's still around 30. I expected to see the VIX higher, but here we are.
Where's that 40 print, right?
Yep.
All right, we're going to get more on the markets in just a moment. First up, don't forget, we're also going to cover the latest when it comes to Twitter headlines. There were a lot of them, and they started last night after the closing bell. Paul, we're also going to talk about U.S. eyes expanding a China tech ban. Yep. I feel like the tensions between the U.S. and China just keep amping up.
And it feels like a Cold War in technology between the East and the West, China, the U.S., just seems to be accelerating.
All right, we're also going to check in with the CEO of the esports company, Super League Gaming. We're going to talk about the brain drain in Russia, the crypto C-suite turnover, and then we're also going to get to the winemaker for Siduri Wines. It's Friday.
It's Friday.
You ready for a glass of wine?
Absolutely.
Look at everybody in the control room's like, yeah, I'm ready. Yeah. All right, let's get to the market drivers report. Let's set your business week agenda. I think some red wine might get Kriti Gupta healthy again, because, man, she's been fighting a lot lately. Kriti Gupta, of course, anchor and markets correspondent at Bloomberg. Might some wine help? Yes, a bottle maybe. Come in, we will share. Case. She's in our Interactive Brokers studio. Vince Signorella, I think he likes something like scotch, or what is it? What's your drink?
It's scotch. You get it right.
I thought I listened. Well, he'll take a case of that as well. I've been learning. I listen. He's global macro strategist at Bloomberg News. He's out there in White Plains, New York. All right, Kriti, let's kick it off with you. I was kidding at the top that, Taylor Swift dropping her album at midnight last night, and that explains the rally, because I can't quite make sense of why, we sell one day and rally the other.
Well, today I think it's more a question of flows than it is anything else, anything fundamental. Because, look, from a fundamental perspective, Snapchat came out with some horrible numbers. And 3 months ago, that would have tanked the whole market, because as a kind of proxy for advertising in the macroeconomy, the idea here being that if advertisers aren't going to do well, it means that they don't think that consumers are going to be buying, and there's a whole spiral right there on the state of the economy. That is not what you're seeing today. And I think that's pretty significant in terms of sentiment isn't driving today's rally. I think what is driving today's rally is the fact that you have $2 trillion of options that are expiring today. So you have a lot of people pulling in and out of contracts. And that's why right at the open, you saw this surge in futures, I should say in the S&P 500, but also futures contracts, because people are using those windows of liquidity to once again get in and out. So don't be surprised if going into the close, you see some pretty big moves.
All right. Hey, Vince, when I started my day, seems like a week ago, earlier today with Tom Keene, the story was all about the roaring dollar.
Is that because it was Tom Keene or something?
It very well could have been.
Just kidding.
I had the yen pushing 152. Things have turned around. What's going on in the currency markets today?
So first of all, I have to say I was taken by surprise. We're told by the Nikkei that the Bank of Japan intervened in the currency markets when it reached near 152. The price action didn't look that way. As we approached the London 11 a.m. fix, there was a big sell-off from basically 151.5 to 149, and then it popped back to 150. And I just assumed that was option digital knock-ins hitting the market, because you usually don't see a big figure buy while the Bank of Japan is intervening in the market. And it may have been part of that, but clearly I guess it was the Bank of Japan getting the ball rolling. And there are two things I think as to why we're seeing equities up today. One, anecdotally, that correlation between a lower dollar and higher stock prices does still exist, and that does keep the machine learning guys buying when the dollar gets hit like that. The other side of the coin is traders may have jumped the gun a little bit with Daly's comments, Fed President Daly of San Francisco, saying the Fed may need to do smaller increments. She didn't mean this year. I think we're still on track for 75 and 75. So the couple of folks I talked to, we think maybe the market may have jumped the gun a little in thinking that she was implying that the next two rate hikes might be a little softer than 75 each, and so that also tripped the machine learners and so on, and here we are at 653 in the Dow.
Well, I do feel like the tone of her comments, Vince, saying we are at or close to neutral rate. We have to be careful that, to watch how restrictive, can't over tighten either. And talking about maybe hitting a level next year and then staying there. Like, I do feel like the commentary is increasingly picking up some momentum of like, okay, we do find that there is this endpoint, at least in terms of rate increases.
Yeah, and I think the one comment that they may have really picked up on, besides the smaller increment part, was she kind of finished with, and we very much need to be data dependent.
We need to be what? Say that again?
We need to be data dependent and very aware of the data. And the data of late, particularly housing, has been soft. We get some more housing numbers next week. And we also get the GDP third quarter price index next week, which may give us a little better feel as to what the next two rate hikes are going to look like.
So, real quick, Critty, earnings, how are they looking so far?
They're coming in. They're
You're
all right.
downloading Taylor Swift's album.
I'm actually, you know what, Matt
She's
Miller.
on her phone. I'm just going to say.
I was, but only because Matt Miller messages in and says, Creedy, you have to talk about the bond market and you have to talk about the dollar.
Matt Miller, you had your shows this
Yes,
morning.
Exactly.
Well,
just
look, I'll say what Matt Miller's dying to hear.
I wore a flannel
which
shirt
is,
for him because it's Friday flannels, and I didn't even get in the group picture. So
he's the worst. What I will say, and I think what Matt wants me to say, / I agree with, is that the weaker dollar story is significant. It's feeding into the earnings story. We've heard it all week, but so is the bond story. You had the Wall Street Journal story that came out, and that's really where you saw the front end of the curve see a massive move, the two-year yield really tanking, because there is perhaps an assumption out there that the Fed might make a pivot or at least shrink the amount of cuts when it comes to the margin of the move. So I think we covered it all for Matt Miller.
Still mad at him. I wore the flannel. No picture. I mean, the point is they're going to pivot at some point. It just depends on when.
Right, exactly. And data dependent, as Vince was saying, so we'll see. Kriti Gupta, thank you so much for joining us. Kriti Gupta, anchor and markets correspondent for Bloomberg, and Vince Signorella, global macro strategist, Bloomberg News, joining us on the phone from White Plains, New York. All right, let's get the latest on world and national news. We'll do that with Nancy Lyons in the 991 studio in D.C.
Thanks, Paul. The House committee investigating January 6th has issued a subpoena to former President Trump, requiring him to turn over all requested documents by November 4th and appear for a deposition November 14th. Lawmakers say Trump was the central cause of a coordinated, multi-part effort to overturn the results of the 2020 election. It is expected this will lead to a protracted court fight. Word of the subpoena comes on a day when former Trump advisor Steve Bannon was sentenced to 4 months in prison for defying a subpoena from the January 6th committee. The judge is allowing Bannon to stay free pending appeal and is also imposing a fine of $6,500 as part of the sentence.
I respect the judge. The sentence he came down with today is his decision. I fully respect. I've been totally respectful of this entire process on the legal side.
Bannon says he will appeal. This year's Thanksgiving dinner promises to be the most expensive we've seen.
The American Farm Bureau Foundation announced the price of a turkey breast hit a record high of $6.70 per pound in September. That is a 112% increase from a year ago. You can blame inflation, but experts tell the New York Times avian flu is ravaging many of the larger turkey farms, putting more pressure on the market. Now, usually avian flu drops off in the heat of summer, but that did not happen with this current strain, and it's spreading through turkey flocks in 42 states. Amy Morris, Bloomberg 99.1 and 105.7 FM HD2.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy Lyons, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. So staying on some of the news flow out of D.C. and elsewhere, we wanted to get to a story. It's actually a Washington Post story about, and I'm reading from the story directly, some of the classified documents recovered by the FBI from Donald Trump's Mar-a-Lago home and private club included highly sensitive intelligence regarding Iran and China. This is according to people familiar with the matter. If shared with others, the people said, such information could expose intelligence gathering methods that the United States wants to keep hidden from the world.
Yes, this is not good, and it just seems the news seems to be just keep dribbling out, if you will, more and more. And I'm just not sure. I guess what my question now is, what did the government get back, and what are they still missing? And it sounds like from this reporting from the Washington Post that there is still more documents and still very sensitive documents. You know, I'm not sure what the next steps are here.
Yeah. Again, this is an ongoing investigation. Other documents, according to the Washington Post, described highly sensitive intelligence work aimed at China. And this gets to why were these documents not stored in government facilities? You guys all know the bigger, broader stories about them, but we do think about intelligence gathering, who gathers it for any nation. It's always very sensitive information. Lives are often at stake, but it's also about national security, and you do wonder, certainly valuable to other people outside the United States.
It is, and the former president has denied wrongdoing in having the documents at Mar-a-Lago, claiming in a recent television interview that he declassified any documents in his possession and that a president can declassify information, quote, even by thinking about it. I'm not sure that's how it works, but we'll let the FBI kind of figure all that out.
I like the dog ate my homework.
Yes, it has the same ring to it, but so we'll have to see. But again, it's the Justice Department, the FBI, hopefully are on top of that.
Yeah, Trump spokesman did not immediately respond to the Washington Post request for comment Friday morning. Again, a lot going on. I'm having some fun, but you know, when it comes down to it, this information, as many are saying, very, very important to the U.S.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Under 2 hours to go ahead of the closing bell. We're looking at a gain this week of roughly 4% on the S&P 500 index. Today, another move higher. The S&P now at 3733, up by 68 points, up just about 1.9%, holding close to session highs just off it, but we've got lots of green on the screen. A 604-point gain right now for the Dow, up 2%. NASDAQ up 181 points, up now by 1.7%. Dow Transports rebounding after yesterday's decline. Transports are up now by 1.7%. Your 10-year 4.22%. The 2-year yield 4.50%. Spot gold up 1.5%. $16.51 the ounce, while West Texas Intermediate crude up 0.3%. $84.77 a barrel on WTI. So lots of green, a move higher. One notable exception, Snap Inc. That is the parent of Snapchat. Its shares plunging now after earnings by 29.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie. Got another exception for you. Check out shares of Twitter. They're
Yes.
also down. Not as much as Snap, but they're down about 5%.
Yes, they might have some problems with the U.S. government, Mr. Musk. So it's a little bit of an issue there. Let's get to that story. We bring in Ed Ludlow as a West Coast correspondent for Bloomberg News. He's in our Bloomberg Interactive Broker studio. And Ed, okay, I guess the federal government saying we might have a security risk with this one Elon Musk. And he owns lots of companies. He's buying more companies. Should we take a look at his deals? Is that kind of the gist?
That's the gist. In layman's terms, that's a good description, right? You know, sources tell us that across different agencies in D.C., they are looking at what Musk has said about the war in Ukraine and his engagement with people online about that. They're looking at what he said about SpaceX's ongoing support financially and logistically for the deployment of Starlink in Ukraine. And they're looking at him buying a social media platform that might not have as many users as a Facebook, but has a really outsized societal influence globally. And they're looking at their options. This is very nascent, right? Sources saying that they're considering, could they use CFIUS as a mechanism to look at the Twitter deal, given they're outside investors? What other mechanisms are there? It seems unlikely that CFIUS is going to play, but big flag.
Is this really about Starlink? Because Twitter's been out there, and I haven't heard any U.S. investigators start to get involved until he started talking, Elon that is, about Ukraine and Starlink.
So, well,
I know you said it's nascent.
One thing really quickly, the White House did issue a statement on Friday morning saying they're not aware of any security review of Elon Musk or any of his companies. You know, I think the sense we get from sources is that Musk is antagonizing the administration, right? It's not as if Musk and Biden have a good relationship. They do not. We know that. Musk often ridicules the president, if we're honest, on Twitter.
Right.
And the president has not proactively engaged with Musk, especially in the EV space, right? Very quick to support Ford and GM, not very quick to include Elon Musk in the list of accolades. The security concern on SpaceX is that this is a man that has pretty high-level security clearance because SpaceX is pretty much the provider of choice, not just for NASA, but the Pentagon as well when it comes to satellite deployment. The way he behaves is atypical of a company executive and one with that level of influence. And you know, I think sources...
What's his clearance, government clearance? Do we know?
We don't know. I think that's the part of the point of having a top-level security clearance. But do you remember in 2019, he went on the Joe Rogan podcast and smoked marijuana, and that raised eyebrows. And at that time in 2019, his security clearance was reviewed again. Why? Because somebody that leads a company that is helping with national defense efforts, should they be doing that on the Joe Rogan podcast? Yeah.
Right, exactly. Well, the timing here is also interesting because...
My goodness.
Elon has to, I believe, October 28th to close this $44 billion acquisition of Twitter.
You know, for me, the most important... On Thursday evening, 4 stories hit the Bloomberg, all about Elon Musk and Twitter. For me, the most important came from our deals and credit team. According to sources, bankers and advisors on both sides are working diligently and furiously to get the deal done by that deadline, the paperwork. The expectation from one source is that Musk is going to go to the banks for the debt and the banks will be forthcoming. Everything is happening for this deal to close. And at the last minute, we get a security and regulatory concern, which is interesting. I mean,
But you're saying that government officials have said they're not aware of anything.
On the record, the White House has said it's not aware of anything.
Okay.
Our Bloomberg sources say they're looking at it.
Okay.
I mean, again, remember, specifically on the Twitter angle, the purchase of Elon Musk of Twitter, he's building a coalition of equity partners. The other key piece of reporting from Thursday night, he's trying to get more investors, right? He's writing to them to say, hey, get involved. Have you got a few million quid?
Right.
Oh, dollars, apologies. The Brit and me came out there. Now, CFIUS plays into that because many of these investors are non-US investors, right?
What do we know about Mr. Musk's views about Russia, about the war? Because what he posts on Twitter sometimes and his view of Putin, what do we really know? Because it seems kind of odd what he's posting to Twitter, i.e., maybe where his allegiances might lie.
What I could do for our global audience on radio and YouTube is say, just go to Elon Musk's Twitter account and read it. You know, it's difficult to follow. He's engaged with players on both sides, the Ukrainian side and the Russian side, which is strange in a war environment to see it play out on Twitter. He caused offense because he suggested actually that Ukraine should accept certain terms like annexation as it currently stands, give the people in those annexed territories a vote to decide if actually they want a future under Russia or not. Right. Many would say, what right does he have to say such a thing? Right. He is maybe an expert in rockets and EVs. Is he an expert in geopolitics? So he's antagonized both sides, and he's so well followed that when he says something, it's heard. And I think that's the big concern.
Well, he also said something else about Twitter cutting the workforce by 75%.
Correct.
The Washington Post story, right?
The Washington Post reported.
Wow.
Well, this is what I'm saying. So he's reaching out to potential equity partners since he's saying one of my proposals is 75% headcount reduction, efficiencies, cost reduction. Bloomberg, by the way, confirmed that.
Yep.
And they were cutting jobs already, but this is massive.
Well,
right?
so I mean, sources sent me last night the memo that Twitter's chief legal officer shared with the newsroom, with the Twitter workforce, saying we were discussing cuts, but that ended once the binding merger agreement was signed in April. I'm told by people in Twitter they're more upset about the admission from Twitter that job cuts were being considered than they are about the idea Elon Musk would cut the workforce, right? Because they feel that management at Twitter have been very inconsistent about how they've communicated.
It's like one of those. Wait, you were talking about this?
Yes. It's not what you said before.
Yes.
So.
15 seconds. What's our next focal point for the Twitter, Elon? Do you have something on your radar?
5 p.m. October 28th. Let's just get it done.
It's all up to the banks, I think.
Yeah.
Put a fork in it, call it done. Ed Ludlow, have a safe trip home. I know you're heading back to the West Coast. We love having you on the East Coast, so come back soon. West Coast correspondent, Bloomberg News. He's going to be busy as we count down to that Twitter deal. I guess getting done.
I think so.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C., Bloomberg 99.1 to Boston, Bloomberg 106.1 to San Francisco, Bloomberg 960 to the country, Sirius XM Channel 119, and around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to the Friday edition of Bloomberg Business Week. Carol Master along with Paul Sweeney of our Bloomberg Radio team. And coming up, we're going to talk about, the tensions between U.S. and China.
Yeah, it sounds like it's getting worse. And that's not good, I don't think, for anybody, but that sounds like it's going that way.
All right, we're going to get the lowdown from Anna Edgerton at D.C. But first up, back to Charlie Pellet with a check on the trading day. Hey, Charlie.
Well, hello there, Carol. And we have got hello, Paul, as well. We have got the Dow, the S&P, NASDAQ all pushing higher right now. We're looking at the best levels, very close to the best level. 2% run up right now for the S&P. The Dow up by 2.1%. NASDAQ up 1.85%. The S&P on track for a 4% gain for the week, unless something dramatic happens in the next 90 minutes. We've got the S&P up now by 72 points. The Dow surging 628 points. NASDAQ up by 193 points. Wall Street saw another day of stunning reversals. Stocks pushing higher and higher after a Treasury sell-off sputtered. The yen jumped as Japan intervened again to prop up the currency. 10-year yield 4.21%. The 2-year 4.49%. Spot gold up 1.6%. 16.53 the ounce. West Texas Intermediate crude up now by about 0.5%. WTI 84.95 a barrel. Well, as for the market backdrop, Anika Gupta is a director at Wisdom Tree Limited in London.
Clearly, there is a lot of focus being paid on the earnings results that are coming in, and it's been quite mixed so far. We started out quite strong, but now we're getting a lot of guidance coming in from companies across Europe and the US, which is highlighting, a bit of a slowdown. So that is definitely also denting sentiment.
All right, well, speaking of some of those earnings and possible slowdowns, Snap Inc. Now, this is ahead of next week's huge rush of tech earnings. Snap reported its slowest quarterly sales growth ever, saying that a decline in advertising spending continues to drag on results. That stock plunging today, Snap dropping by 30% right now. Again, recapping the Dow, the S&P, and NASDAQ all higher. 2% gain right now for the S&P. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you, Charlie. All right, well, so it goes, the tech war between the U.S. and China. And today we've got a Bloomberg exclusive on how the Biden administration is exploring the possibility of new export controls that would limit China's access to some of the most powerful emerging computing technologies. This is according to people familiar, Paul.
Yeah, this is big news because it just kind of goes to the tensions that seem to be building across many fronts between the U.S. and China. Anna Edgerton joins us, and is a technology reporter for Bloomberg News. She joins us on Zoom from Washington, D.C. Anna, I've kind of depicted this whole situation with China and the U.S. It feels kind of like a technology Cold War is really building here. And here's just another example of it. What's the latest?
Yeah, I think that's a pretty good way to describe it. And what we see is really a continuation of the decoupling of these economies, now especially concentrated in the technology sector. And what's driving this is a real fear from the United States that China is going to be able to develop really powerful next generation of technologies, such as quantum computing and artificial intelligence, and that could be used to improve China's military capabilities, which is something that the United States definitely doesn't want, especially if there's a risk of this kind of Cold War that we find ourselves in turning into a kind of hotter war.
Anna, I gotta say, game on, because I've been talking with a lot of executives from the C-suite in content, in technology, and elsewhere, and leisure. And they are all paring back their expectations when it comes to China. This isn't just talk anymore. They are rethinking any kind of growth strategy when it comes to the Chinese market. What you are hearing in general, that's the case, right, in terms of what we're seeing out of D.C. And it doesn't feel like it matters whether it's a Democrat or Republican in the White House.
Absolutely. That's two really good points. Some of the executives that I've spoken with have described this relationship with China as declining for sure. The only question is on what trajectory, whether it's kind of a slow sputtering or if we're going to see like a really big drop off in our ability to relate to the world's second biggest economy. And your other point was good as well, that this is an area of bipartisan concern. We have Republicans and Democrats being very concerned about the rise of China and the kind of increase increasing tension that we see with that country. So there are actions that the White House can take, like we reported, the export controls that we saw beginning of this month and future export controls on additional technology, in addition to things that Congress can do. So regardless of who comes to power after next month's midterms, we expect to see a big ratcheting up of tensions from bipartisan action in Congress as well.
And I see in your news story here, you talk about quantum computing.
You were just doing that last night, weren't you?
Yeah, exactly. Of course, with my phone, I think. What is quantum computing, and why is it maybe deserved of some oversight here?
Yeah, so the main difference between quantum computers and regular computers is that if you think about a phone book, where a regular computer would look at each number one at a time, in some cases very quickly, a quantum computer could look at all of the phone numbers in the book at the same time. So that incredibly speeds up what this kind of technology is ready to do. This is still very nascent technology. This is still being developed. It's not reached its full potential. But there's a huge concern about the power of quantum computers when they are fully developed. They'll be able to do things like break down the security and infrastructure that we have under current computing, undo passwords to break encryption. And that's a really scary prospect when so much of our economy is based in technology, based online. To have quantum computing capacity in the hands of an adversary would be a very scary thing.
Hey, Anna, when you talk to executives and you guys do your reporting, how much of concern too is, all right, so we're cutting off China increasingly, but what does that mean in terms of the flow from China back to the United States? Is there concerns about that as well?
Yeah, there is a fear about some of the collateral damage of this type of measure, but what we're hearing right now is that that's worth the risk to keep this technology out of the hands of people in countries that we wouldn't want to have it. One concern that I've heard is just the decision on where to draw the parameters for this kind of measure. Like if you're going to put export controls on software related to artificial intelligence, it's actually a hard thing to define. So the challenge for administration officials right now, working with industry experts, is just to figure out kind of where to draw the box around that technology, where to set that definition, to set those parameters, so that there isn't additional unintended consequences and more technology brought into these controls that really shouldn't be beholden to any new rules that are put in place.
And real quick, 30 seconds. Have you heard anything from the big tech companies like a Microsoft, like an Intel? Have they had an opinion here?
And Anna, just quickly.
Yeah, we're just looking to see how industry experts are weighing in with the administration, offering their expertise on what's the best way forward.
All right, we're going to leave it at that. I must read a Bloomberg exclusive, U.S. eyeing expanding China tech ban to quantum computing and AI. Anna really laying it out and explaining it to us. Anna Edgerton, she's technology reporter at Bloomberg News, joining us via Zoom from Washington, D.C. Was it like I feel like a couple of years ago, people started to talk about this division, that it was a tech war, not just maybe a traditional war, and we're seeing it really play out.
We are, and again, I'll be interested to see, how far it goes and what the fallout is.
Yeah, all right. Let's get back to world and national news. We're going to stay in D.C. and check in with Nancy Lyons. Hey, Nance.
Thanks, Carol. The House committee investigating last year's attack on the Capitol has issued a subpoena to Donald Trump, demanding the former president account for his actions under oath and initiating a legal showdown. We get more from Bloomberg's Joe Matthew.
This is the result of the committee's vote in its final hearing held just over a week ago.
Mr. Chairman, on this vote, there are 9 ayes and 0 noes.
The resolution is agreed to. The subpoena directs Trump to provide documents by November 4th and testimony beginning November 14th for however many days it takes.
Again, Bloomberg's Joe Matthew, host of Bloomberg Sound On, heard hit daily here on Bloomberg Radio at 5 p.m. Wall Street time. Trump's subpoena comes on the day that Trump's long-term advisor, Steve Bannon, was sentenced to 4 months in prison and received a $6,500 fine for refusing to comply with the subpoena from the House committee. David Schoen is Bannon's attorney.
We will be filing a notice of appeal, as the judge indicated. Very grateful to the judge for thinking through the issues candidly.
Schoen believes the appeal in this case is bulletproof. President Biden is making the case for his handling of the economy.
Today, my administration announced that this year, the deficit fell by $1.4 trillion. The largest one-year jump in American history, $1.4 trillion decline in the deficit. Let me repeat that. The largest ever decline in the federal deficit.
Biden says under his predecessor, the deficit went up every single year. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. I'm Carol Master along with Paul Sweeney. And hey, everybody, the U.S. Northeast is so short on heating oil that the fuel used to power home furnaces is being rationed even before the start of winter. Do you have oil or are you gas?
No, gas.
Me
but
too.
This story I found, you think about the, energy shortages, you think about war-torn Ukraine or just
Absolutely.
Europe in general. I didn't think it was going to be a thing here, but apparently in the Northeast, there is, a shortage of heating oil and diesel as well. And so people have been the price has been reflecting it. And it's going to be very expensive for a lot of folks, particularly in the Northeast, who rely upon heating oil to kind of fuel their homes and businesses.
You always see the trucks around right in neighborhoods, you
Yep.
know, who's getting oil, who's not. Some wholesalers in Connecticut are putting the retailers on allocation, meaning they can only get a limited amount of fuel based on availability. This according to Chris Herb, president of the Connecticut Energy Marketers Association, which represents around 600 family-owned retailers in the state. These retailers must, in turn, ration their customers. You know, we talk about sentiment and how important it is.
Yep.
You start getting rationed.
Yep. Oh, yeah.
Talk about a sentiment change.
Exactly. All right, I'm going to get a little geeky here for you. A main hurdle to replenishing regional fuel supplies has been a steep, sustained backwardation in the diesel market. Backwardation happens when prompt deliveries like today are priced higher than they would be over deliveries in the future. So that's really kind of one of the big issues here. Just from a trading perspective and a pricing perspective, there's been, and so what I think the authorities are trying to do is just kind of prevent, if they can, by just panic buying by people and businesses.
Unbelievable. So listen to this, guys. Wholesale heating oil in New York Harbor averaged $4.09 a gallon yesterday, compared with $2.46 at the same time a year ago, according to data from a price reporting agency, Argus Media. So that's a big difference.
That's a big difference, and people will see that this starting just about now as we head into late October. So an issue for folks in the Northeast.
It's going to be my dad all over again. Shut the doors, lower the heat, come on. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are off session highs, barely, but the Dow, the S&P, NASDAQ still posting big gains on this Friday. We're on track for a winning week. Wall Street seeing another day of stunning reversals. Stocks now pushing higher and higher after a Treasury sell-off sputtered. The yen jumped as Japan intervened again to prop up its currency. The S&P right now up 68 points. That is a gain of 1.9%. The Dow up 596 points, up by 2%. NASDAQ up 182. That is a gain of 1.7%. The 10-year yield 4.20%. The 2-year yield 4.48%. Spot gold up 1.6%, $16.53 the ounce. And West Texas Intermediate crude is up 0.4%, $84.83 a barrel on WTI. Briefly, Snap Inc. shares plunging after last night's earnings report. We do have Snap lower now by 30.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So, a brain drain in Russia. This is a story from Bloomberg Business Week that you can find right now on Bloomberg.com, also on the Bloomberg terminal. And that gets into the thousands of Russian working professionals that have escaped to neighboring countries. Freelance contributor Willem Marx, former Bloomberg colleague, I might add, reports on how they got out and what their departure means for their Russian homeland. He joins us on the phone from London, along with the editor of Bloomberg Business Week, Joel Weber. He is in our Interactive Broker studio. Reading through this story, man, it's just, you get an idea of what these people are going through.
Yeah, so Willem came to us with this and said, hey, there's this group of people that have obviously left the country following Putin's conscription. And he's basically said, like, I can get access to them and tell their stories. And he did this so quickly because it's like such an ambitious feat of reporting to have turned around, since this is just a couple days ago, weeks ago, really, that this went down. And what it showed to me and us, I think, and what I think readers are going to get from it, is sort of this desperate way out of the country. You know, it basically gives you a roadmap of worst case scenario. You got to get out of Russia. What does it look like? And the real interesting takeaway here is the scale at which this is happening really paints a dire picture of what the Russian economy, which was already seemed like it was in a really bad place, seems like it could be even worse. So Willem, take us to this chartered flight that you found out about and tell us how all of this went down.
Yeah, Joel, so I have a friend from college who's Russian, and I think you and I were talking a few weeks back, and I said, I've got this friend, and he just arrived in Armenia, and he says he's got lots of other friends who have been fleeing cities like Moscow and St. Petersburg. And through that friend, I built out a much larger network of individuals, many of them working in areas like IT, finance, and started speaking to them and realized that two of the cities where a lot of younger professionals were going were Tbilisi in Georgia and Baku, the capital of Azerbaijan. And speaking to folks there in Baku, it turned out that a couple of entrepreneurs who had based themselves there months earlier, but following the start of the invasion in Ukraine, realizing that stability in Russia was not going to be part of their future, they'd set up a co-working space. And as the situation got particularly desperate for many people after Putin announced the mobilization, they decided that given how expensive the remaining few flights out were becoming, they should actually try and charter a plane and get dozens of friends and friends of friends and acquaintances out of the country, charge them essentially the cost price for the ticket, which was sharing the total fee between the 55 of them on the first flight. They did 2 flights in the end. And through that, I met a network of people who'd arrived on these flights, had dropped everything essentially, and arrived in Baku, many of them deciding to sort of set up a new life there, hoping their families will join them in the not too distant future.
Willem, is there a risk that, or what is the feeling among the people you met with about Putin shutting down the borders? Does this feel like it's the last days or the last weeks before that people can potentially get out?
Interesting question, Paul. And actually, that was something that a lot of them said had been the real driver for them to get out of civilization on the 21st. Most people I spoke to had bought tickets by the 24th or 25th of September. Most of them were out of the country by the end of the month, because the big concern was not necessarily that they would be drafted or conscripted as part of this partial mobilization, more that they would be trapped in Russia. And if that mobilization continued in the months and years ahead, they would get dragged into a conflict they just simply didn't support.
Willem, you're right. These people typically lack the wealth and swagger of the oligarchs at the commanding heights of the Russian economy, but their loss is sure to have a negative impact. What will be, or what might be, their expected impact on that Russian economy?
You're talking about hundreds of thousands of people, Carol, people who understand the software industry, who work as engineers, that have creative roles within important companies in Russia. They are of a generation, typically, let's say 25 through to 50, where they are the future CEOs, the future executives of Russian businesses. And by leaving the country, that will constitute a brain drain, which we've never seen at this scale in a century or so. We've had people, bright minds across the country, leaving Russia, of course, over the last 20, even 30 years. You think of people like Sergey Brin. But what's happening over the last few weeks could have profound implications for months ahead, years ahead. And just talking to one expert at Chatham House who runs the Russia-Eurasia program, he made a really interesting point. As Russia continues to focus its efforts on investment in hydrocarbons at a time when the world is drawing away from oil and gas, if you then add to that this compounding effect of bright, younger professionals leaving the country, those that don't work in those industries, what does that leave Russia with in 10, 20, 30 years from now? And his conclusion was not a lot.
So, Willem, who's benefiting from this as all this talent seeps out across the border? Where are they going, and what are those countries, who are the countries who benefit here?
Well, a lot of them are what Russians think of as the near abroad. That's the modern term for former USSR states such as Armenia, Azerbaijan, Georgia, Kazakhstan, Kyrgyzstan. These are countries where, the older generation at least still speak very fluent Russian. Russians tend to be able to visit there without the need for a visa. And in the major cities, Almaty, Baku, Tbilisi, Bishkek, there are large numbers of very qualified people with specialist skills setting up either businesses, trying to find local work, creating co-working spaces, professional hubs, and the potential economic engine they provide is substantial, particularly when it comes to areas like IT, particularly fintech, finance. And the challenge, of course, is that they also potentially bring with them political headaches for their host governments, host countries. They will be concerned about potential diplomatic rifts with Moscow if it's seen as a place that is welcoming these talented Russians.
So, Willem, I'm curious, such a cool story, feat of reporting. What did you learn quickly to wrap?
I learned that there's a lot of people across the spectrum in Russia who really don't believe in what's been happening in Ukraine over the last few months, and have over many years been incredibly pessimistic about what's happening across the country. And that suddenly has come to a culmination point where they decided enough is enough.
All right, we're going to leave it on that note. An incredible read, and I highly recommend everyone go to the Bloomberg terminal and online to really read all of the details and the reporting that's in Willem's story. Willem Marx, thank you so much. Great to hear your voice. Freelance contributor at Bloomberg News, joining us on the phone from London. And of course, our thanks as always to Jill Weber, the editor of Bloomberg Business Week. Be sure to catch Bloomberg Business Week on the weekend, 8 a.m. Wall Street time on Saturday morning. You can also check out our podcast as well. Just find it wherever you get your podcast. You are listening and watching Bloomberg Business Week on Bloomberg Radio. Carol Master, Paul Sweeney, and this is Bloomberg Radio.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close, just 60 minutes left in your trading session. Caroline Hyde, Romain Bostic, joined now by our colleagues Carol Massa, Paul Sweeney in for Tim Stenovic, and we have, of course, our full audiences of TV, radio, and YouTube to digest what is a whipsaw of a day and a stock market that remains 2% higher.
It's a nutty week. That's what I'm going to say. I'm sticking with airlines again. I know I've talked about it all week, but man, we've seen some outperformance among individual names in the sector as well as the overall groups. If you pull up the Super Composite Airlines Industry Index in the S&P 500, it is up about 4.6% for the week overall. Actually, you're looking at a gain of about another almost 2% today. American's up 1.7% today. Delta's up more than 1%, and you're seeing United up more than 3%. Can I just tell you, United alone, Paul, is up about 14% for the week overall.
Is that right? All right.
And they seem to be upbeat about the outlook.
There's some pretty good outlooks from Delta, from United.
Yeah.
Let's go back to one of my areas of my youth, which is social media. It is not a good place to be here today. I'm looking at the shares of Snap down, 29-30%. Really calling the question the revenue story here, and that is a concern not just for Snap, fewer people staying on the platform, advertisers pulling back, but it also goes to the other social media platforms. We've seen some weakness bleed over into some of those names as well. So it's really going to be an ongoing issue for these companies. If this country goes into recession, what happens to ad spending?
Yeah, marketing costs a very easy switch to just dial down a little bit over in corporate America. And so we are going to see the ramifications. Snap currently brutal, off by 30%. Let's look at the rest of the benchmarks though, because Snap, of course, relatively speaking, it's a bellwether, but it's not got a big market cap, so it doesn't affect the NASDAQ. We're currently off by 1.8%. Well, we're higher by 1.8% on the NASDAQ. We're seeing more than 2% climb for the Dow, 73 points higher. That's 2% on the nose for the S&P 500, 3,738. The Russell 2000 also up almost 2%.
When you talk about what's leading this higher, at least on this particular day, it's not tech, it's actually materials, it's energy, and some of the financial stocks. In fact, consumer discretionary and the tech sector kind of in the middle of the pack there. Nevertheless, all 11 sectors right now are in the green, including real estate, only up about 0.1%, but it gives you some idea to the broad-based nature of this rally. On a weekly basis, it is tech out front, and in fact, Netflix is the best performer on a weekly basis in the S&P 500, up 26% over the last 5 days, 8% here on this particular day. The second best performer on the weekly is actually Schlumberger, up 10% here on the day and about 19% on the week. The company actually posting its best profitability that we've seen going back for at least 7 years. Meanwhile, to the downside, keep an eye on Tenet Healthcare. Those shares down 32% right now. It's the second worst performer on a weekly basis in the Russell 1000. The outlook that it gave was quite interesting here. Higher costs and, of course, a lot of concerns here about some of those more lucrative elective type of surgeries and medical treatments, not necessarily getting back to those pre-pandemic levels. And of course, the Elon Musk Twitter circus, that continues. Remember, there is a court order deadline next Friday for that deal to be closed, or that trial then gets renewed. Twitter shares down 5% here on the day, back down at $50 a share.
Meanwhile, of course, all this tumult on the micro basis, we look out to the macro and really how it hits sentiment, or not, as the case may be. We've heard a lot of hand-wringing from Bank of America, of course, Michael Hartnett and the like of his team talking about whether we're at absolute capitulation levels. Well, not when you're actually looking at fund flows. US stocks, we actually saw money move in to the tune of $12 billion for the week of October the 19th. Global stocks, $9 billion. We are seeing significant drawbacks in bond funds and indeed in gold. But really, still actually, though, you counteract the equity story with money still going into cash.
Yeah, interesting to see that. And maybe it makes sense against, the backdrop in terms of what we expect from the Fed. Although it's interesting, guys, I don't know if the Fed drumbeat is kind of softening in terms of the hawkish moves. So we did hear from the president of the San Francisco Bank. We're talking about Fed Bank, I should say, Mary Daly, who weighed in on what we might be seeing when it comes to Fed moves. Check it out.
What you see is growth below trend in 23, GDP growth below trend, policy tightening that gets the rate up next year between 4.5 and 5%, that one policy tightening that raises and then holds, because we have to keep the rate at a tightening level in order to fully reestablish price stability.
Of course, that's the president of the San Francisco Fed, Mary Daly, there at an event earlier today. She did say, starting to talk about slowing down, though, their rapid pace of recent increases in their benchmarks. So it does feel like maybe a little bit of a softening of that hawkish tone.
But what do you make of the fact that when we heard from Charles Evans, there was, of course, the comments from yesterday, and then this recorded message that now it's being released, this idea of sort of a recommitment to making sure that they get inflation back down to that 2% target. And at least in his words, this idea
Is it a recommitment, though? I mean, have they changed?
His exact words were, we're still committed to restoring inflation to a 2% target. Those are his words, not mine. And really just this idea here that they have a lot more work to do. So it kind of raises the question of where does the discussion of a pause or even a rollback of this even begin?
One of the names we like to talk about a lot is Apple. Stock's up about 2.3% today, but some really surprising news here before the open this morning. Apple's head of hardware design, Evans Hankey, she said she's leaving the phone maker 3 years after taking the job, and she just took the job in 2019 and replaced the iconic Johnny Ive in terms of design at Apple. So it's fairly rare that we get turnover in the senior ranks at Apple. So that's a big move and for the Apple followers out there.
I gotta say, this is like the Thanksgiving dinner where we're kind of debating about interest rates and
someone's like, "Can I save us? Can I save us from ourselves?
Could you pass the potatoes?"
It's like the crypto chat really around.
It is, right? Because I don't know. I feel like every day we come in and we either get an up day or a down day, Caroline, based on the Fed conversations that are going on, our expectations in the market.
Well, what turned it around maybe wasn't the Fed, but the Bank of Japan.
True.
And that is where the intervention came from. This is a central bank that has had enough with one-sided moves. They've talked, they hinted at it, they said they would come, and finally the market got what they asked for, a sudden shoot higher.
Yeah. Okay. Well, I'm going to ask someone to pass the mac and cheese here and just pivot ahead to earnings next week. I mean, what we saw just a few hours ago with regards to the moves in dollar yen was really just remarkable. And as soon as it sort of hit the wire, everyone said basically nothing can move a currency pair like dollar yen in that way, other than a central bank or some other massive player. And at least based on the reporting by Nikkei, that appears to be the case. I do want to go back, though, to Paul. He had brought up Apple because we do get Apple earnings next week. But more importantly, we get basically the other really big tech companies, right? The Apple, Microsoft, Amazon's, Alphabet. I think Meta's in there as well. I might be forgetting a couple of others. But this idea of whether that's going to be enough to save this market. We saw, of course, Netflix surprise to the upside. The question is, can those other companies, the biggest weighted ones in the S&P, also surprise to the upside?
Yeah, I think what we're probably going to find next week is those that have an advertising exposure, they're going to be able to really call that out as a little bit of a headwind there. So think about, the Metas of the world. But for those that are, in the software space, maybe the cloud space, what we're hearing from the analysts is spending remains pretty darn strong here from some of the key customers. So I think it's going to be, the expectations are still pretty good.
Yeah, did you see the results out of the Oracle's that event they had out in Las Vegas where they kind of gave that 2026 target?
And the fact that they could give a 2026 forecast is striking.
Yeah, interesting.
All right. Did you hear turkey's going to be more expensive?
Yeah, I did, and fewer and far between.
Yeah, I know. It's going to be more mac and cheese rather than the turkey. All right, guys.
Why don't we eat turkey at other times of the year? It's just that we just save them up for Thanksgiving. Is that how it works? Because I mean, nobody. I don't go over anyone's house in June and there's a turkey on the table, right? I mean, it's basically what? It's Easter and Thanksgiving.
Did you ever have like a turkey and a sandwich though?
No.
Well, no. You're missing out. You're missing out. All right, we got to go.
What does it taste like?
It's good. It's good. We will be back in less than an hour's time. We were going to wrap up the Friday trading day, wrap up the week, our cross-platform coverage, Beyond the Bell, radio, TV, YouTube. We're going to count you down to the close on this Friday.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, folks, we will rejoin our TV colleagues to count you down to the closing bell at 4 p.m. Wall Street time right here on radio, TV, and YouTube. What a week, man.
Yeah, I mean, it's but we're good way to end it here. I mean, getting the S&P up solid 2%. It's been trading solidly up all day. Good volume out there as well. So a good way to end the week.
It looks like we're too. I'm just looking at some numbers week overall. I think we're up more than 4% for all of the major equity averages this week. So quite a bounce back.
And good volume. I mean, the volume today in the S&P 500 is 17% higher than its trailing 30-day average. So you got some conviction in there.
I always think it's interesting, too, if you kind of end on a stronger up day, right, heading into the weekend. For me, it kind of says something. But do you believe like the names that we're going to get in terms of earnings that could change sentiment easily next week?
We saw it last quarter, right? We had that little rally there coming into July, and based upon, in large part, on some of the good earnings, particularly out of the tech companies, just better than expected. Not great,
right,
but just better than expected, and we'll have to see what the guidance is like.
Right, in this environment, we'll take that. All right, let's get back to world and national news. For that, we're heading back to D.C. and Nancy Lyons. Hey, Nance.
Thanks, Carol. The House committee investigating the January 6th attack on the U.S. Capitol has issued a subpoena to Donald Trump. We get the details from Bloomberg's Joe Matthew.
This is the same subpoena the committee approved in a unanimous vote during last week's televised hearing, expected to be its last. It says the former president must provide testimony starting November 14th and continuing for as many days as needed. It also directs Trump to hand over documents by November 4th.
Bloomberg's Joe Matthew, host of Bloomberg Sound On. You can hear it here on Bloomberg Radio at 5 p.m. Wall Street time. Steve Bannon, one of Trump's political advisors, defied a subpoena from the January 6th committee, and today he received a sentence of 4 months in prison and a $6,500 fine for contempt of Congress.
The judge said the sentence would not take effect while Bannon appeals, which he said he will do, adding that a Republican election win will help.
The American people are weighing and measuring what went on with the Justice Department and how they comported themselves. Merrick Garland will end up being the first Attorney General that's brought up on charges of impeachment, and he will be removed from office.
The jury did not accept Bannon's claim that executive privilege justified his failure to testify to the committee, while his lawyers claimed it did. In Washington, Irv Chapman, Bloomberg Radio.
Americans will be allowed to contribute more of their money to 401k and similar retirement savings plans next year. The IRS says the maximum contribution that an individual can make for most plans will be $22,500. That's $2,000 more than this year. Global news 24 hours a day, on air, and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Carol Massar, Paul Sweeney here in our Bloomberg Interactive Broker studio. We are streaming on YouTube. And you talked about Apple, and I was having some fun with you as we shifting gears. Because it does feel like the interest rate conversations that we have with our TV colleagues, we all go through, it's like back and forth. And we're like, well, wait a minute. It gets a little tense. It was really good what you did.
Yeah, it's good
Bringing
stuff.
up Apple.
I like Apple. I mean, you always talk about Apple. Everybody likes to talk about Apple.
Yeah.
And one of the reasons that Apple's worked so well for investors over the years is that they have such a solid management team, really solid succession planning, not a lot of turnover. But today we had a little bit of news. Apple's head of hardware design, Evans Hankey, announced that she is leaving the iPhone maker 3 years after taking the job, creating a significant hole at the top of a company famous for its slick-looking products, and that's according to people with knowledge of the matter. What's interesting is Hankey was named to the post in 2019 and replaced Johnny Ive, the company's iconic design chief for 2 decades. So you think about a 2-decade run for Johnny Ive.
Yeah.
Evans Hankey, very well thought of out in the Valley, stepping down.
Right, and someone who was familiar with, right, Johnny Ive, and knew kind of, almost like, I would say, like a disciple of, right? So to pass the baton, it probably was an easier, kind of move, even though he was so identified with the iconic designs that have come out of Apple. In this story, it says her exit, or pending exit, marks the first time that Apple will be without a de facto design chief since co-founder Steve Jobs retook control of the company back in the late 1990s and appointed Ive to the job. So you do wonder, I mean, this is a company, right, that we cherish the designs that come out.
Yeah, it's extraordinary what they've done. It's extraordinary, kind of just,
yeah,
you think
right?
about all the Apple products you have, and it's just amazing. And how they're all interconnected. It's a system, and it's obviously drives their services business, because I got to get my iTunes and I got to do all that kind of stuff. But if you're out of the Apple ecosystem, like my oldest son is, he's like an outcast.
I know.
We can't FaceTime as a group. It's crazy.
And the elegance, as this story says, of Apple's products has been just so key to the company.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks keep on going up another 705 points right now on the Dow Jones Industrial Average on a Friday ahead of a weekend. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are surging today, helped by a Wall Street Journal article saying that some Fed officials are signaling greater unease with big rate rises to fight inflation. Like you said, Dow's currently up 705 points. S&P's gained 83, and NASDAQ rises by 2.1%. The U.S. 10-year yield at 4.21. Gold is up 26, and energy is in the green. Bitcoin is trading higher by 0.7%. Among the main 11 S&P sectors, only telecom was in the red, and leaders to the upside in the Dow, Caterpillar, JP Morgan, and Goldman Sachs, while Verizon fell 4% after earnings and led to the downside. Also after earnings, American Express fell 3%, and wrapping things up, the Wall Street Journal also reported that banks may sell up to $13 billion of Twitter debt around the end of the year. Live from the First Word breaking news desk, I'm Bill Maloney. Charlie?
Okay, Bill Maloney, we thank you. And here live. Breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So remember earlier this week we talked about, this was with Bloomberg's Max Chafkin, about how Mark Zuckerberg is all in on the metaverse, right? Focusing on that rather than Facebook, the company he created and is still really the big business behind Meta, despite the name change. So Zuck is all in on the metaverse, and Paul Sotu is our next guest.
Yeah, absolutely. You know, I'm not really sure what the metaverse is, but I think I'll know it when I see it. I'm not sure. But Ann Hand, she knows it. Ann is the chairman and chief executive officer of Super League Gaming, joins us on Zoom from Los Angeles. So Ann, let's start out, particularly for the folks that are out there in their cars driving around. Let's just start out really simple. To you, what is the metaverse?
Yeah, it's a great question. And if you ask 10 different people, you're going to get 10 different answers. The way that I simply try to talk to both investors and some of our larger brand partners about it is the first kind of part of the metaverse is metaverse games, or what we call open world platform games. And in those games, instead of you going in and just playing a game that's served up to you, you're actually given tools to create your own games and experiences. And there's no limit to what that gamified experience can be. It can be concerts, fashion shows, it can be all kinds of things. Metaverse game or open world platforms have been around for over a decade. It's platforms like Minecraft and Roblox, and now increasingly Fortnite. You don't need a VR headset, and you can participate in those experiences as a creator or as a viewer or player right now, today. Hundreds of millions of kids are already there, and Super League's built a pretty big footprint there. We reach 70 million unique under 18 gamers a month in those worlds alone. So the first thing I say is, big meta may be 5 years away, but metaverse games, don't be afraid of them. They're around. That's where kids play. They prefer those types of game modes where they can be the creator as well to traditional video games. Now, that said, I do think that bigger meta is going to continue to happen faster than we think. There are companies building out the engines so that you don't just have to use Roblox and Minecraft to create these experiences. Big brands, iconic IP will be able to create their own worlds and interact with their fans and gamify things and monetization around those fans and own that full user and that monetization stream. And that's not far away. That's happening really now and over the next 1 to 2 years. So I think it's going to be gradual. And personally, for me, I don't know if I'll ever be the person wearing a VR headset for 10 hours a day, right? that big meta vision. But what I can give comfort around is it does exist right now in these game platforms.
So is it all, when we think about the metaverse or bigger meta, is it just with a gaming component? Is everything with a gaming component, or is it the way you see it? I know you're an esports community and content platform, so that's your world, but is it something even more wider than that?
Yeah, no, thank you for that question, because we do get called esports a lot, and yet we are so much bigger than that now. When we talk about those 70 million monthly players, we're talking to all kinds of people who are seeking community inside these game-based platforms. But Super League isn't really just a gaming company. We gamify experiences. And so to your question, it's much bigger than that. We helped Samsung earlier this year bring Charlie XCX into the metaverse for a concert. We ran the red carpet for the MTV VMA Awards inside a digital world where your digital avatar could participate in that experience, even if you don't live anywhere near New York. Where
Did it have legs? That's all we want to know. No.
Yeah, and you know, I went in and I kept knocking the paparazzi over by accident. So like, you know, if you're bad at it,
Was it really by accident? No, just kidding.
Well, let me tell you, and this is a real-time example right now. We have had the pleasure of helping Mattel take their steps into these metaverse games. And right now, you can go into one of our game worlds called Livetopia, and you can hang out in Barbie's dream house. We've created a 3-story digital version of Barbie's dream house. You can swim in the pool, lay on the chaise lounge, go hang out in Barbie's closet and try on clothes. Those aren't, to all of us, again, traditional video games. That's about community. It's a digital cul-de-sac. It's people finding people they want to socialize with. And so Super League has come a long way because we now have the kind of reach where we can speak to the Barbie girl, the Hot Wheels boy, that older demo that maybe a Samsung or MTV wants to reach. Because here's the reality. Everybody is a gamer these days. And it's not just hardcore gaming like we tended to think about it 5-10 years ago.
All right, just real quickly, what's the business model here? Do I sell advertising against this audience? Do I charge them subscription?
Yeah.
What's the business model?
Yeah, the primary business model is that we work with brands and partners to take them into metaverse worlds that we already operate ourselves or are part of our extended network. We have several hundred game worlds. So when a brand like Mattel comes to us, we can say, look, here are the types of game worlds that we really think matches your target audience. Here's the experience that we think is right. And then we have some pretty special proprietary ad technology, media tech, and analytics. And what that means is we may have built Barbie's dream house in one world, but we have 3D Barbies, characters, walking around, digital avatars, in other worlds directing traffic to it. I think in the first 2 weeks of Barbie, we had over 32 million visitors to her dream house. So we're talking about really outstanding numbers as far as engagement, but also deep engagement, you know, hanging out 25, 30 minutes at a time.
And come back soon, because I'd love to get deeper into the monetization of those millions, whether it's Barbie Dream House or others. I'd love to talk more with you. Ann Hand, she's chairman and CEO of Super League Gaming. Stock, though, by the way, down about 71% so far this year. It's a small cap, micro cap, you might say. She was joining us via Zoom from LA. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Nothing like a $2 trillion wipeout to shake up the C-suite.
Exactly right, and that's the crypto. I think that's the crypto winter. Is that what they call it?
I think
The
so.
crypto space?
It's got a little chilly. We're going to get into that with our own Mike Regan. He wrote the Bloomberg Big Take today. It's also a most read. We'll get to it in just a moment. Let's get back, though, to the trade. We've got Charlie Pellet, just about 29 minutes to wrap up the trading week.
Indeed, and what a day for Wall Street, especially significant because we are heading into the weekend here. We've got the S&P right to the numbers. We've got the S&P now higher by 91 points, up by 2.5%. The Dow now surging 779 points, up 2.5%. NASDAQ up 252, up by 2.4%. Obviously on track for a winning week. 10-year yield 4.20%. The 2-year 4.48%. Spot gold up 1.7%, rallying $27 the ounce now to $16.55. West Texas Intermediate crude up 0.6%, 85.02 a barrel on WTI, and Bitcoin up 0.8%, 19,178 right now on Bitcoin. So Wall Street seeing another day of stunning reversals. Stocks rallying after a Treasury sell-off sputtered, and the yen is jumping as Japan intervenes again to prop up the currency. Now, what about the Federal Reserve and the outlook there for rates? Claudia Sahm is Director of Macroeconomic Research at the Jane Family Institute.
I think at this point, anyone that's talking about the first half of next year, there's a lot of false confidence. I would not be surprised how fragile financial markets are, that the Fed has to pause to get them back under control.
In a week where home building stocks have been hit by surging U.S. Treasury yields and data showing weakening demand for homes, one analyst is throwing in the towel on the sector. Raymond James analyst Buck Horn has downgraded his ratings on all the builders in his coverage, including Lennar and Toll Brothers, citing surging mortgage rates. Shares of Lennar, they're up today by 2.75%. Toll up right now by 3.6%. Again, recapping, stocks higher. S&P up 2.4%, 10-year 4.21%, 2-year 4.48%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate it. Well, Tom Keene's not here, so we can talk crypto. I'm looking at
Does
a
he not
talk
crypto?
Well, he kind of poo-poos it, as you might imagine.
Okay.
I'm looking at a one-year chart of Bitcoin. A year ago, about $60,000 per token. Today, as I look on my handy screen, $19,180. That is a tough market environment. And when you have headwinds like that, you can see some shakeups in the C-suite. That's certainly what we're starting to see in the crypto space. With the story, Mike Regan, senior editor for Bloomberg Markets, he joins us live in the Bloomberg Interactive Broker Studio, so he gets a gold star from me for coming in the studio. Mike, talk to us about what's going on. I mean, crypto, talk about the crypto winter. Things are tough out there. Maybe it's just the evolution of a young marketplace. What's your reporting show you?
Well, thanks, Paul. And first, now I know why Tom never talks to me anymore, I guess. I thought it was something I said, but it all makes sense now. But yeah, basically we noticed as the, crypto winter continued to get chillier and chillier that there was just this drumbeat every day of another resignation. Some of them kind of not too surprising if you look at the likes of Celsius Network. That's the big kind of crypto shadow bank that's in bankruptcy now. Voyager Digital, another crypto startup that's in bankruptcy. Okay, not too surprising when a company like that shakes up their C-suite, but we started keeping track of them, and of the big sort of well-known firms, there's at least 24 departures. There's likely a lot more of sort of the smaller fringe companies that we didn't track so closely. And we started talking to some experts, some people in the market, and saying, well, what's going on here? And I think, not to date the three of us, but I think we...
Watch it, buddy.
The three of us, I will say this, we all remember what life was like before the internet, right?
Yes.
And we remember...
I remember doing a piece explaining what the internet was.
Right. First, you need a computer. But we all remember sort of these larger-than-life personalities from the dot-com boom, the startup, the founders.
Steve Case.
Right, and these just sort of really larger-than-life personalities. And the same thing is true of crypto. I think Alex Mashinsky of Celsius is a great example. Here's someone who is, really styles themselves as like a revolutionary almost, someone who's trying to topple the traditional financial world. Similar to the way so many people tried to disrupt brick-and-mortar business with the internet back in the day. But then what happens is you get this shakeout in the market, right? We had the dot-com bust. Now we have the crypto bust. And what's interesting is all along the way, the traditional finance firms, your Fidelities of the world, the big banks it took them a while, and they did their due diligence, and they finally got into crypto towards, trickled in over the years. Now the retail trader has sort of evacuated, and now it's really, there's a much larger influence from your more buttoned-up traditional finance firms. And a lot of
because of those collaborations or interests? Because I wonder, is this akin to like Google when Schmidt came in, right? The adult, right? And I wonder if it's kind of that iteration, it's kind of same thing.
It's the adult in the room phenomenon, I think. And I talked to a professor at Columbia's business school. He's the head of their fintech program at Columbia. R.A. Farrakina, his name is. And he said, this is not uncommon in technology. You have your early adopters. You remember who the first people we knew who used the internet were? It was your real tech-heavy sort of, you almost had to be a programmer to just navigate the thing.
The university system is where
I was going to say academia, right?
Yeah. So it really sort of like a niche early adopter. And then everyone else comes in, the mainstream comes in. And there's a famous book from the early 90s called Crossing the Chasm, which kind of describes how that tech evolution happens a lot. You've got your early adopters, sort of your revolutionary, call them misfits or sort of really bombastic evangelists of the technology. And then eventually it picks up, and it crosses the chasm into sort of more mainstream. So, a lot of people think a similar thing is happening in crypto.
Well, what I also see, what I love in this story is this chart, because I'm an old Wall Streeter. I like to follow the money. The venture capitalists are pulling back on some of their crypto allocations.
Right, absolutely. Down about 37% year over year for the third quarter. And that's part of it, too. You're sort of, in the salad days of crypto, venture capital was flowing freely. They liked that sort of character, that sort of crypto from central casting, revolutionary type of character. Now there's a lot less venture capital. They're being much more sort of due diligence on it. It's kind of a more grown-up phase of the market, I think.
I feel like if it's a book, like it's a 50-chapter book, and we're like chapter 2.
Yes. Yeah, absolutely.
It's kind of what it feels like. Mike Regan, thank you so much. Mike is senior editor, Bloomberg Markets, my co-host yesterday on Bloomberg Business Week, right? Was it yesterday? No, was it the day before?
Yesterday, yeah.
Sorry,
right.
It's that kind of a week, man. I have no idea what day it is.
I had to think about it too, Caroline.
All right, you can read Mike's story and more from Bloomberg, The Big Take. It's on the Bloomberg terminal at bloomberg.com/Big Take. Please don't judge me, but that's why they're going to feed me some wine at the end of the show.
Yes, they will. Why not? It's Friday. It's Friday, so that makes sense. So we'll have more. But look at this market. It's still moving higher here. So as we head into the close, up 2.4%.
All right, let's get back to world and national news. Nancy Lyons is on it in D.C. Hey, Nance.
Thanks, Carol. The Congressional Committee investigating last year's Capitol attack is officially issuing a subpoena to former President Trump. The panel wants his testimony and relevant documents by the first half of next month. The subpoena was issued on the same day a judge sentenced former Trump aide Steve Bannon to 4 months in prison for ignoring his subpoena from the same committee. Biden administration officials are discussing whether the U.S. should subject some of Elon Musk's ventures to national security reviews. Bloomberg's Ed Ludlow with more on why there is concern.
Because of the comments that Elon Musk made around the war in Ukraine, because of the threat, albeit a short-lived one, to pull support for the Starlink system in Ukraine, and because of his deal to buy Twitter, which, while it has a small user base, has outsized societal influence.
Bloomberg's Ed Ludlow says one tool the administration is looking at possibly using is CFIUS, which looks at acquisitions of U.S. businesses by foreign buyers. Nearly 5 months after a gunman killed 10 people at a top supermarket in Buffalo, New York, Governor Kathy Hochul announced today a monument will be built in East Buffalo to memorialize the victims.
We want to do something where people remember, a place to come and reflect, a place to honor, and a place to say never again.
Hochul says we must continue to tighten gun controls, like not allowing teens to buy an AR-15. Michael Bloomberg, founder of Bloomberg LP, the parent of Bloomberg Radio, is a donor to groups that support gun control. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much, Nancy Lyons. Carol Massar along with Paul Sweeney here at Bloomberg headquarters in New York City. And I have to say, for the first time, was it this morning, I actually looked at my 401k.
Oh, no.
But it wasn't as bad as I thought.
Okay. You know, what I saw was some endowments are starting to report their returns for the year ended June 30th, and they're kind of flat.
Which is impressive.
But you know what I think is happening is they haven't marked to market their private equity investments, which can be like 20-30% of their portfolio.
So when do they have to mark it down? When they sell it or what?
Periodically. Periodically. I think I'm not sure exactly, but there's no way because stock market's down 20-some-odd%. The fixed income market's down double digits.
I'm kind of shocked at that. Hey, so we want to talk a little bit about 401ks. Or Suzanne Woolley of Bloomberg News has a story out on the terminal, and there's been a lot of social media momentum too about this news. The IRS boosting how much Americans can plow into their 401k plans next year by a record amount amid a surge in inflation. This is another one. Yep. Social Security checks and 401k apparently.
So the numbers are, the contribution limits for the popular tax-deferred retirement savings account will rise by $2,000 to a maximum of $22,500 in 2023. And again, keeping in line with the CPI. It's the biggest dollar increase since the cutoff began being indexed to inflation in 2007, when the maximum amount allowed was $15,500.
You and I were talking about this off air because you can also do, there's increase, of course, for for anybody who's trying to do catch-up contributions if you're 50 or older. So the changes with this new increase by the IRS because of inflation, you're now talking about $30,000 a year that you can plow into your 401k.
Yeah, and it's election time, benefit election time for most employees and employers, so it's a good time to kind of make those changes.
Yeah, exactly.
If you can.
Exactly. But it's interesting, right? Vanguard reports out there found the percentage of salary contributed to defined contribution plans, such as 401ks, last year rose for 42% of plan participants, whether savers elected to increase the amount or they had it boosted automatically by their plan.
Yeah, I have my working kids. They're a 401k. Right? Max out your 401k. Trust me, there's not going to be a safety net there for you.
I feel like I tell anybody of that younger age, do it.